Check 1, 2. Check 1, 2, mic check.
It's too loud too, it's fucked up. Snap.
Check.
Where's the chat box? There it is. Oh yeah, hold on here. Need to change all that. Come on. There we go.
Can you hear me out there? G-Force, can you hear me? You can't hear me? Okay. Thank you. Appreciate it. Yes. All right. So I have a question for you. Hold on. Let me go to the Discord and ask Bork. Can anybody tell me if I'm streaming in 1080p right now? Give me one quick second out there. Gotta go to the Discord. I am in 1080p. Okay. I had to make some changes. I was streaming in 720p. And I'm not streaming like a bunch of sites this morning. I couldn't figure it out. So I have it like minimum video things that I have to do. And my audio's been fucked up too. I swear, first 5 seconds of the stream. So I have to do some stuff with you this morning. Today is good morning, by the way. Hope you're all doing well. Happy holidays to whatever you're celebrating out there. I know a lot of people are out there traveling, taking time to be with family. I hope you are able to do that, especially as we wrap up the year and the data that's coming out this week. And then, of course, today with the FOMC rate decision and the SEPs, the economic outlook for Q1 of 2025. So we're going to jump over. I got a few things I got to do with you guys this morning, so I apologize for that. So we're going to jump over to... let's go to the main screen for just a minute here. I got some wonkiness going on this morning. I have to do some stuff with you here on the show with me this morning. I gotta make that bigger. Why is that not bigger? That should be larger. Can I make that larger? Nope. Nope, I cannot. Hold on here. Let's make that bigger. Nope. Can I make that smaller? Nope. No, yes, I can't. Can I make that smaller? Yes, I can. You can make that bigger so you guys can see this on your screens at home. It's a little large. It's a little swole. Can I just make that a little bit smaller right there? Right there? Yeah, something like that. That's kind of cool. I like that. That's good. I like that. We move that over just a little bit. Move that. No. Yeah, right there. Move that over just a little tiny bit. Right in there. Let's see what that looks like. I think that's enough. I think you can see all of that. Maybe that is too large. I make a little bit. I gotta do it. Just little details here. Sorry, guys. I think you can see this down here enough. I think you can see all that you need to see, unless we're gonna focus on it. Give me a second here. One quick second. Okay. Sorry for the delay. So I've been trying to launch a bunch of new stuff and keep getting caught up in technical issues. And still having audio issues. Even this morning, I'm having audio issues. Yesterday morning, I had audio and video issues. Trying to bring the stream back to 1080p because people can't read things on the stream. So I think that's solved at this point. I think it is. I know there's always a fire somewhere, but this is the best time of year to do it. End of the year is like end of the year or the summer doldrums are really the only 2 times out of the year that I have to do this stuff. As a matter of fact, I was talking to Joe Donut about my office, and I'm like, I was we're doing all this work, right? I'm looking at in my office, and I have fans that circulate air in and out of my office. It gets so hot in here that I have to recycle air, and what happens is I get a lot of dust. So I'm constantly like vacuuming, blowing dust out of the computers and stuff like that. And I'm like, I need to do a refresh in here. I'm like, I haven't done a refresh in a year or two, and I need to like get in and clean everything. Moving air like that just brings dust. Even with, I have filters in my house and my aircon system or whatever, and it doesn't matter. It's because I'm moving so much air through my home in and out of my office that there's just no way around it. And I'm constantly like battling, picking up dust. I don't know what that means, but I haven't done that deep clean in my office, and it's driving me like I was in here like vacuuming, like vacuuming corners of my office and the walls and all that kind of stuff. So this whole week's been like, whenever I get into this stuff, it's like 3 hours later, 5 hours later, 8 hours later, and it's never done. And of course, I'm launching a bunch of stuff in the background, and so I got to spend more time with people, which is great because you get the time to like sit there and say, okay, do it like this, and let's do it again together, do it again together, do it again together. There's no other time. Like this stuff takes time. It's very much like coding. I think people, myself included, I think I look at a coder and I'm like, it should take like 5 minutes, and not 1,000 hours. And of course, it takes 1,000 hours. And it's always that like one small piece of code that puts it together and makes it work. Not the other 1,000 hours. It's that one small thing. And on your end, you don't see that. You know, like on your end, you see just a face, or you just see the output of information or data or whatever. And but the back end of it is a nightmare. It's a full-on nightmare. I'm trying to relate it to something. If I was to, how about I give you something to relate it to? I took up the hobby of ham radio and HF radio too. Well, actually, HF, CB, ham, and if you don't consider it a hobby, it can be very frustrating. It's a lot of learning and a lot of process, and then not a lot of satisfaction. And then once you get through with it, there's that one moment of satisfaction, and you're like, oh, finally, I figured it out. I ran into that when I built my first dipole antenna, and it was to get my first to receive my first broadcast was difficult. I live in a city, so I had to get above everything else in the city, and I wanted to build this thing from scratch. I didn't want to buy a kit or buy an antenna, and just like receiving my first broadcast that I received was from Pennsylvania, and it took me building all this shit from scratch. I didn't buy my stuff. I built everything, and I think it took me took me months. Actual time, maybe 4 weeks of actual working on it, and I could not even receive anything of value. I received like NOAA channels, but I mean like picking up like a 70-meter ham band broadcast, and it was from Pennsylvania. It's first place I made contact with. Now that joy was it was amazing. It was like better than sex. But the struggle to get to that point was tons of work, insane work. So that's where we are when I do this stuff. It's just like constant, like hours upon hours upon hours upon hours of figuring stuff out. As a matter of fact, yesterday I thought I had it done. I deleted everything I had this morning and did it again because I wasn't happy with the order of expanders and fucking audio cables and mixing boards. I needed them in a specific order, and I didn't have them in that specific order. So I deleted everything and did it again this morning one last time before I went on the air this morning. And that was just the audio stuff, not even the video stuff. And I think it's working. I think I got it. So even when I turned the show on this morning, I didn't know if it would work. I was like, I have no idea if this is going to work. I was like, we're going to run this. We're going to run this and see what happens. So I think I got it right. You do it 4 or 5 times and you refine it and refine it, refine it. So attention to detail. Teamwork is the key. All right, so let's take a look at the market together. We'll go through this. We're gonna go through at SPY right now. We'll set this all up for the 2 p.m. We'll do this together as a group because I'm kind of not prepared. Not prepared. I'm prepared, but I've been doing all this other crap. So I'm like, I got all this set up from yesterday, but I gotta redo it again for today. And it takes me time. It takes me every morning, every night. It takes me 2-3 hours, something like this. It's not going to take us that long this morning, but we'll do this together. You guys can see how my process in the morning, how I go around and do this stuff. Hype train incoming already. Right on. Whoever that pesky, what up? What up, pesky B? Happy holidays to all of you out there, by the way. Smile. We got aliens. We've got Trump. We got no aliens, do we? I got to go back to that conversation from the other day because I was saying that I'm like, are you guys prepared for all of this air traffic above your heads to be normalized? And that's what they're trying to tell you right now. They're telling you that it's all like, hey, this is just normal air traffic. Just get used to it. We'll talk about aliens at some point today. Stuff to keep you entertained. My assumption here is that everyone's on vacation, so they just need some shit to fill their time with. It's got to be that. It has to be that. And then we don't have any aliens over Detroit. Detroit. When I first moved to Detroit, right? When I first moved to Detroit, it really was every holiday. Guns go. It was like Iraq, just gunfire every night. not every night. It was like high holidays, like New Year's, Christmas, 4th of July. I mean, gun show. The whole sky. You'd find bullets out in the street and stuff, and that's all faded away. Most of that's faded away, but Detroit is fully armed. Like the chief of police in Detroit came out once and said every person in this city should be armed. I don't care if you even have a felony. If you're not committing the felony and you need to protect yourself, we can't get the police there in time. You got to be able to protect yourself. So like everybody armed themselves in the city of Detroit. And when I first moved here, I think about the aliens and I'm like, there's no fucking way that they'd ever fly those drones over the city of Detroit. They would shoot. Like you think there's people are trying to shoot the drones out of the sky and stuff. I'm like, hell, you do that shit in like Chicago, East LA. You do that shit in Detroit. They would shoot them all out of the sky. There's no way they would get away with that shit. Just no possible way that would be happening here. That's why you don't see drones in Detroit. Guaranteed. And I even think that this New Year's, I was talking to my wife and I'm like, I think they're going to fire the guns. And they didn't do it for 4th of July this year. I didn't hear any guns. I mean, none. I heard none. And my neighbor, like, I've got a neighbor that's like 3 doors down from me. And he's a real Detroiter. He's like a tough guy. You guys have never met him on any late night streams either. He's a real tough guy. He's like, he's got like a bunch of like used car lots, and he's like kind of a gangster, but he's not a gangster. He's like, you know, a legit guy, but he's a tough guy. He's like a tough Detroiter. And we don't hang out because I'm not that guy. But we are very friendly with each other. We'll get together and like I'll loan him something, he'll loan me something or whatever. And this is 4th of July. I see him on 4th of July. We're chatting. We're at the end of the block and we're talking. And he said to me, he goes, you don't hear no gunfire tonight, do you? I'm like, no. I'm so surprised. I'm like, I haven't heard any gunfire. It's been like waning every year. And he said, that's because he goes, I used to shoot my gun off at nighttime. And I was like, oh, no shit. He's like, I was like, you're one of them? He's like, yes. He's like 2 years ago, I went to go do it. He goes, and they caught me. He goes, the police came to my house. I go, for what? He goes, they've got gun sniffers now. He's like, they can listen to where the gunfire is, and they come to your house and tell you can't do this anymore. I go, wait a minute, they take your guns and charge everything? He's like, no. He's like, they just came to the house and said they can't do this shit anymore. It's done in the city of Detroit. I thought it was fucking hilarious. Detroit is like old school. Still, it hasn't been gentrified yet. It hasn't like become everywhere in the United States where everything's on board and above board. It's like, you know, you get admonished still for things. Like they did come out and they'll talk to you and say, stop. Can't do that anymore. We're not quite at the phase where the SWAT team shows up and raids your house and, you know, does all the craziness and all that kind of stuff. So I just thought it was hilarious. So anyways, he's like, you can't shoot guns in Detroit anymore. He's like, if you shoot a gun off on a high holiday, he's like, they know exactly where you are. They'll come fucking find you. And I'm like, God damn. So I was thinking about that with the UFOs. I'm like, I wonder if the UFOs came to Detroit, would all the like gun sniffing or gun listening devices just be popping off all over the city and they couldn't respond to all of them. Anyways, it's like a rant about gun sniff or gun. I keep calling it gun sniffing, but yeah. The aliens skipped Detroit and probably Chirac. I bet they aren't in Chicago either. I would almost guarantee you are parts of Chicago. At any rate. All right. So we got a lot of like manipulation going on. You can see that, right? There's a ton of manipulation. And if anyone buys calls, they're just like, fuck you. Especially in mass. I can't even talk about calls on the stream anywhere. Can't talk about zero dates. Can't do anything with any kind of money because it's such a light market right now. We're gonna take a look at. We're gonna take a look at first. We're gonna take a look at. Let's see the trigger screen. I didn't know if porn would come up when I brought this screen up, but Let's trash, or not trash everything, but at any rate, let's look at this was the last brief that I gave you. An expectation we'd come down here, right? And they bled us down just a little bit more, right? Come back up here. And you'd expect us to go up here and make that, or fail that all-time high. Nope. They grab you right here and slam you back down this morning. So it's just like repression. We know we're going up. I'm just going to let you know right now, you're going up. It's just a matter of fuck you. Burn the chain if we're going higher. That is the truth right there. We'll get into like the hawkish Fed cut, the hawkish cut, and all the drama. Like the arguments you get from bears, it's just like nonstop. Nonstop. You can see that we're doing the window dressing all over the market. You can see it on Avgo. You can see it on Tesla. You can see it all over the place, right? Unloved stocks being ripping faces off. So if there's that much doom and gloom, if you look at NASDAQ, they don't know. And this here, all this like I'm gonna hedge the market, or this is gonna explode to the upside here. You can't tell me that this isn't gonna. Well, maybe. I guess I'm wrong. The hawkish cut will send us down to the depths of hell. So what we're gonna look at right now is I'm gonna delete this now just to get rid of it all. So we're gonna delete all this, right? Delete everything. Bam, all gone. And we're gonna look at this is what I do in the morning. So we'll just do what I do in the morning. So we're gonna go to a monthly basis here. And just take a peek here and look at this monthly candle here and look at them. Still haven't sold us down below the monthly candle, even on SPY. Can't keep it down, right? You would have thought that at this point, if it was that bad, we would have given this whole entire month up. So this is pain, right? That wick is all just pain. We haven't broken that wick. There's been no break of this monthly right here. There's no break right there, right? We'll just put that green right there. Haven't given up that month at all. Now this is painful, of course, right? But we have not given that up at all. So we'll draw that in there. We got another little monthly candle down here, or fair value down below. Everybody wants fair value. They're not getting it. We got a month right there. We'll put another month bar up here, just so we know where we stand, right? We're going to go to a weekly basis here. On a weekly basis, right there. We're going to snap another line in there. We'll just make this, we'll say previous month high. We're so close to it, we'll keep it kind of close to us. Make that a 16 right there, just so we know where it is. Excuse me. And we're going to do a little weekly candle right there. Bam. Another little weekly candle down here if we start getting nasty. Just in case things get nasty with the Fed today. Get that hawkish Fed. We're going to go to a daily basis here, take a peek. Let's see what we got going on here. Previous month high, we'll leave that just over there so we have it. Context. We got our weekly candle back over there. We got the daily candle coming up to the weekly. That's nice to see. We have not broken below the daily candle yet, so I'm still very bullish. Still feeling good. Daily there. Another daily down here, down below. Bam, bam. It's good to look, good to see all that. 4 hour. This is a trend, right? See this right here. This is our real trend. Put this back over there. Let's see what we got going on this 4 hour trend here. That we can see here. Got a gap down below here to grab. Monthly candle over there at the weekly. You ain't getting that. Sorry. Not happening. Your previous month high right here. Not too much. Trying to sell you down off this top candle right here. 1 hour basis. Closer look here. A lot of mamma jammas going on. Oh, look at that hourly right there. 1 hour. Another 1 hour right here. One hour right there. That up there. Even see that? I don't know if we can even see that. Things like put that over there. Is that even a 1? I don't even know if that's a 1. There we go. Getting old. We do a 30-minute basis. And we're going to look at velocity now. Take a quick look at Velo. Had some nice rips off these lows on Velo here. You can see that. That could be something similar to today's, if we get any doom and gloom today. You can see that nice low we're coming into over here. What's also nice is we're coming into where we're bullish. Daily Velo coming into that zero line down here. So you can see that nice rip higher, a little bit of more doom here, start coming higher in the market. I like seeing that. We're winding up for more bullishness, not bearishness. Take a look at a 15-minute basis here next. So we got going on. Doom, doom, doom. Doom, diddy, doom, doom, doom. This is your breakout here. Go to a 1 minute. See what we got going on here. And now we're going to take a peek at some targets for today. So we're going to look at pivots. Take a peek at pivots. Make sure we're on a daily basis. We are. We're above our pivot point. That's good to see. This means we're bullish right now. It's like seeing that. Buying the dip. We got the 930 right in here. Came right in to buy it. We're going to snap some time frames in here. We're going to snap 1030 right in there. Close all that up. And then we're going to do, let's just check the economic calendar really quick. Make sure we got nothing funky going on. We don't have like a 30-year fucking bill and a 10-year or a bond, 30 and 10-year bond. 10:30 this morning, middle of today. So we got 10:30 here, 11 o'clock. We'll start jumping these over as we get to the 2 o'clock hour. And then we're going to snap 2 lines, the important lines for 2 p.m. Wait a minute. Can I even go over there? 30-minute basis. By the way, we should start launching, if you don't know already, we should start launching today. Like blast off through all morning, all afternoon, right through the Fed meeting. This should not end at all today. This is when we look back on the Fed meeting last year and the DivX trade, this is like when we super ramp out of here. If you don't know that, Monday, we talked about it on Monday. Should be like a super ramp. We're up and out of here at this point. So if you're ready to put your rocket ship on or whatever. All right, so we're good here. target above. Right there. All right, back to the main screen here. You've got a target to the upside of, you got 605.35, maybe an extension to 605.63. You also have a bull cross happening above. You've got the 5-minute trigger here, and you get the 1-minute trigger coming up, so you could see like a break higher, back test, then the move up to 605.67. Be careful of this 15-minute resistance up here. This is where we begin to break out. That's going to take some time. We'll likely trade sideways in here. Okay, next thing we're going to look at is going to be gamma. We got to talk about gamma this morning, and give me a second here. I'm going to go through Qs with you, DIA with you, IWM with you, and maybe some other stuff with you today too, if we have some time between now and 2 p.m. If I can do some individual tickers with you, we will. So I'm going to set this up in the bottom here so you can take a peek. We've got gamma, a lot of gamma coming off the market. We've been banging on the door to go higher. And of course, we're pinned into that 610. There's like a giant fucking magnet on 610. Now, as that gamma rolls off into OPEX and end of the month, two things happen. Do calls get rolled higher? Well, they've been rolling calls higher, I should say that. And also, do they continue to roll those calls higher? So that door opens for us to move higher out of the market, or out of this zone, this consolidation or distribution zone that we're in, or because price has the ability now to move freely. You have like a magnet to 6,100, right? So you have pretend you have like a piece of metal. My pencil is 6,100. You have like a magnet to that number, right? When that goes away, the market is free to move up or down. You understand the concept of that, right? So the market can actually become more volatile. Now, you'll hear bears out there today. It's a window of weakness. The market can go down to the depths of hell. In my view, you need a sentiment change for that to happen. I believe in sentiment more than a lot of things. So, like the news, I'll tell you what price is with the news. How the news is spun to you, I'll tell you what the price is. But for me personally, I like to see what that sentiment shift turns into. Does everybody's sentiment turn bearish or not? Is it just an opportunity to buy the dip, or is it something where sentiment's changed? You get the hawkish Fed. I don't think you get the hawkish Fed, by the way. Jerome is not that guy. We'll talk about more about that later. Give you a reaction function, all that kind of stuff. And what to expect. We're going to get a hawkish cut today, and you're going to expect more cuts. Lots of cuts into 2025. We'll talk more about that too at some point this morning. But let's talk about gamma, though, and the implications of gamma this morning. So let's go to the bottom right-hand side of the screen here. No porn. Yes. Just kidding. So we're looking at gamma this morning. We've got some more development to the downside, which is good to see. Now, I'm not seeing any this morning. God damn it. We had put gamma yesterday, and that was good to see. Not today. That gamma is not as important right now, supposedly. There is gamma down here, but it's not as important. But they were buying puts yesterday, which is good. We need more put buying, like more put buying, more and more doom, as much as you can get to fuel the break higher as we roll our calls higher in the market. So for SPX gamma for today, we're looking at the downside 5974. There are some other bars down below that do matter. There's some gappage that needs closed down here. I don't see that happening today. Maybe 5,900. I'll show you in a minute where that gamma is if you want. Actually, I'll just show it to you right now. Hold on. I'll show you guys this shit right now. Courtesy of Gamma Labs. So, couple things to note here. This is 6055. 6020, you don't want to go anywhere below that. 6100, this is the big giant fucking bar. It's like you shall not pass, basically. Bang, 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 bang. Need that gamma to come off so we can trade higher. And we're beginning to buy calls at higher levels. This is all good. You need people to, we don't want to be buying calls in the money. We want to be buying calls out of the money. Here's 6150. Here's 6200. As this gamma comes off, we have a window into that 6150 right now. And hopefully we can get some more call buying above 6250, 6300. You see the people out there talking, all they're out there doing is saying, we're going to 60, or we're going to 7,000 next year. We're going to 7,000, going to 7,000. So that should help bulls. Even if we swing lower, it should help bulls right now in the meantime by buying calls farther down the road. Yeah, that's right. Get those calls, get that call buying. There's that 6,700, baby. It's that right there. Oh, yeah, 6,800. Yeah, keep buying those fucking calls so that we can go slightly higher. On the downside, we don't have any gamma that matters today or at this moment, but this gamma can matter in the future. So I want to show you a couple places down here, 5975, 5950, and then the major bar at 5,900. So just keep this in mind right here, 5,900, 5950, and also 5,975. We'll look at a few other things right now too. We'll look at some CTA positioning. See where we are at that. And spin this bad boy up. We should also look at, I guess we should look at some strike, some at the money volatility too. Murder this vol today. You see this line right here above my head? See that line right there? That fucking volatility is going to get fucking murdered. And it starts to climb again as we head into what date? Do you know? The 23rd. 23rd. If you're going to be a bull, you're going to be a bull until 9:31 in the morning. 23rd, I think. 9:31 in the morning, 23rd. Today is the 18th. So we're going to look at positioning for S&P, or yeah, here we go. CTA positioning leveled off right now. Can go higher, but right now leveled off. They want to see us break above what number? 6,100 for CTAs to get long. More room for CTAs to get longer. Vol control. A little bit more left in the bucket up here. A little bit more left in the bucket. This is actually when vol control was helping bulls all the way up into, watch my cursor right here, right? Vol control helped all the way up into July 10th or so. And when we had that Volmageddon event, even when vol control left, we still kept climbing, didn't we? We climbed actually into the middle of July. So there's a little bit more room for that bullish push higher. And for the dip to be bought. So vol control funds still there for the bulls. Asset net managers net long short for COTs. Commitment of traders still there. Not a ton more, but they're still there. And if you look at this actually on a larger frame, one thing about COTs right now, commitment of traders, see that peak right there? See that higher peak right there? If you keep going higher here, there's still more room for the commitment of traders to the upside. Commitment of traders look pretty good right now, too. You might be thinking, now that's the top cap over here. Nope. If you were to look at this chart, some of it's cut off, but if you were to snap a line up there, commitment of traders, there's more room to go higher. So, back on SPX Gamma here. We're parked on support. Gamma flip is below us. Dip buyers still here. Supportive. Bam. Buy. Buy. Local resistance, 6,100. Need this bad boy to go away so we can get that window of weakness to break higher. And when does that window of weakness come into play? As we get closer to OPEX. Today's Wednesday, Thursday, Friday. So if you want some volatility, you got it. It's happening today. You're going to get that volatility today into Friday. We have 109 million up here to the top. And then here's 6150. This is the target. Here's the call wall, 75 million. Not that big. 88 million above to 6,200. Not that big. It's not 150. It's actually small. So we could actually break above this stuff and call the call wall here and the target here. But I'll tell you what, quickly, we can be moving this even higher. Quickly. 75 million actually here. So kind of weak. This call wall could break in a snap of a finger to the upside. I shouldn't be saying all this stuff because you're all probably out there just slamming the buy button. The dealer's like, oh, fuck. Local support right now. We're right where we are. Gamma flip just underneath. Target to the upside. Go back to the main screen real quick. And down below here, let me fix this over here. Move that over a little bit. Move that just a little bit over, You guys are a little bit too big over there. Hold on. A little bit too big. A little bit. I gotta give a little bit of room to this. Squinch that down just a little bit. You guys got 1080p now. There you go. I'll give you a little more vertical. So this SPX again, I'm gonna blow this up for you. You can see where this where these sellers are up here. See where that local support is right there. Coming into the hourly trigger right now with a 3 trigger cluster. An hourly trigger, 1 minute and 5 minute trigger right now. You can see that, right? Yeah, I think you can see that. Let's move this. Let's change this to a 15-minute basis. And let me hold on here. Let me show that. That's nice. I like that. Hold on here. All right. Push that here for you. Make that so you can see it. See that down there just fine. Note that at 10:30 we get oil reports, fuel reports, gas reports, all at 10:30. At 11:30 we got a 17-week bill auction. No more news until 2 p.m. with the rate decision and the economic projections. We also have the presser at 2:30 with Jerome. We're also coming into R1 at 6:05:34. R2 is at 6:06:40. Yeah, it's a bear holocaust. They're gonna get run the fuck over. They've been given like 2. I think I've said like what? They get 2 chances. There's like 2 bear traps, 2 small bear traps, and then there's like a major bear trap after Christmas. So basically, you should see the market run higher today, right? And we have a half day on the 24th. Get your pencils and paper out. On the 24th, you get a half day, right? So the 23rd is Monday. So you're gonna come into the market Monday morning, like 9:31. You're like, yeah, we're getting long, dude. It's bullish as fuck. We're trading higher, and they're gonna dump all of SPX on you and spy on you. Roving bands of dividend collectors, and they're gonna hammer you more than likely. There's a high probability here. You got like VU DivX, I believe, is on the 23rd. So they're going to hammer you with this stuff like all on that morning, and they're gonna bum rush you right in the 24th into Christmas. You're gonna come back on the 26th, and you're gonna be all bared up, getting fucking short as fuck. I'm like, Capper, go on the daily trigger. It's terrible and everything's burning. You're gonna long the fuck out of that right into the 28th or what I think 31st. Long the fuck out of it right into the 31st. And then we'll dump that shit last day of the year. Shake it all out. Right, 3:45 p.m. last day of the year. Or I think we're close. Sorry, I said 31st. 20. We're closed on the. I think we're closed on the 31st. That's New Year's Eve. Whatever the fuck the last day of the year is. I thought it was the 28th, but 28th is a Saturday. So whatever the fuck the last day, 4 o'clock p.m. Dump all that shit. Come back on the I don't know, 2nd, 3rd, 5th, whatever it is. Come back in the first week. All the volume come back in, find the low, run that shit up into the inauguration. That's pretty much the plan. Okay, so breaking above the hourly trigger right now in SPX. Watch for the back test on the bull cross here on the 1 and 5 minute trigger. Tagged R1. That's that. Could see some down move right there, and then that move higher. Give me a second here, guys. Oh, need water. More water. All right. I'm going to read some news to you. This is to get you prepared for the rest of today. If you want more fuel to add to the bull case, there could be a ceasefire deal between Israel and Gaza in the next few days. JPM reporting that strong gains across hedge fund categories in November. Remember, hedge funds were net short for most of this year. The release of hedge fund performance data for November revealed strong gains across all hedge fund categories, suggesting that most funds benefited from the Trump trade. That said, the November gain was not enough to close the gap between the performance of macro hedge funds, in particular CTAs, systematic macro funds. I'm going to eat this. Hold on. I haven't had any breakfast this morning. I've been drinking coffee since like 4 a.m. Suggesting that most hedge funds benefited from the Trump trade. That said, the November gain was not enough to close the gap between the performance of macro funds, in particular CTAs, systematic macro funds, relative to other hedge fund categories, which all delivered double-digit total returns year-to-date to November. The performance of equity long-short hedge funds was particularly strong in November, with their beta to global equities rising to well above average or neutral levels, as shown in Figure 6. I'll show you that here in a moment. Yeah, I'm not going to show you this. I'll post this in the Discord. This implies that equity long-short hedge funds added risk in November into and after the U.S. election, following some de-risking in October. This elevated equity exposure of equity long-short hedge funds in November is consistent with the high percentile for equity positioning into our cross-asset positioning monitor, which aggregates for each asset class various position indicators like future contracts, momentum signals, mutual fund betas, hedge fund betas, client surveys, and more. This week, we expand our cross-asset positioning monitor to include EM equities and bonds as well as equity regions. The current picture shows high equity, Bitcoin, gold, and long dollar exposure, elevated duration positions in government bonds, but underweights in EM securities or EM equities and bonds. They ramped the 10-year into this Fed meeting today. That's good to see. Oh, I forgot about that. The government funding bill, the omnibus. I went through that this morning. I read through the omnibus that was pushed through to fund the federal government and our farmers. And, of course, everyone that was impacted by the hurricane season. We funded the hurricane season. We also funded farmers. We did also extend the seasonality for E15. I think it's E10 or E15. I can't remember which one. But that which should not actually impact, shouldn't sell a ton more of that gas at any rate. But it was fascinating to see the spending in that bill. Spend. And fascinatingly enough, there were quote unquote conservatives that were against that spending, but sure than shit signed off on it. And that Trump trade that Wall Street talked about also said that Trump would spend more than Kamala Harris in these next 4 years. And we are living up to that even right now with our Senate and our House of Reps. And I don't think that we won't live up to that during Trump's presidency, that we will spend even more. Now, of course, that does become a problem at some point, right? The debt to GDP ratio can be quite scary. And I think we do have hell to pay for that, or we will have hell to pay for that. But I think the timing of it is, people are mistaken on the timing of it. I asked people or told people on Monday they should read about the Herbert Hoover years and the interplay of what was going on in policy, government, tariffs around the world, and even immigration, things like that. Like Trump will probably get his stuff done that he wants to get done, but the spending is probably going to continue, and we're going to pay for it, just not today. Maybe in 6 months, 9 months from now, we'll start paying for it. All those things will come to fruition that Trump promises you, and none of it's going to fucking matter at that point. It's probably going to have this nice big bubble blow off top. But of course, they're spending again. And I don't think that they're going to stop spending either. And the next time you got to look at that is in March. And you're going to have to look at it again in probably June or July, too. And you're going to be a little bit blown away by that as we continue to do that.
Higher than the expected build of 2 million. Distillate to draw.
Can you hear this right now? Let me know in public. Can you guys hear this?
Deeper than the expected build of 1.1 million. Crude Cushing inventories, a build of 0.108 million, a build of 0.108 million.
Okay, you can hear the new squawker in the background? Okay. So the other day I had audio going and we couldn't hear it. Trading higher now into 1030, trying to tag 605.67.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month.
Yeah, we got to talk about that stuff. So it's going to be a game of chicken. And I don't trust Wall Street. It's going to last until September, boss. Meanwhile, we are getting the fuck on out. It's going to take them time to get out there. They're big elephants. It takes them time to make those moves. I haven't seen it under the surface yet that they've left yet. So we'll monitor it as time moves forward. You guys got to read about Herbert Hoover. I'm telling you, it's mind-boggling. And we also had a COVID in 1918 and 1920. Fascinatingly enough, like we literally are reliving fucking the 18 to 1928 right now. And they break out the old playbooks, don't they? I even think like I got so much more to expand upon this. Not today. This isn't the day for it, but we have a lot to expand upon that. So OPEC is concerned about plans by President-elect Trump to boost U.S. oil production, while his transition team is also preparing to cut federal subsidies for electrical vehicles. Additionally, the Consumer Financial Protection Bureau is considering investigating credit card reward programs. Japan's trade data showed stronger than expected exports, but weaker imports, leading to expectations the BFJ will keep rates steady. Everybody was afraid of the BFJ in the end of the year. Rip all that bullshit up. I kid you not. Like bulls are like to the right and up. Bears like I gotta write a whole entire thesis about why we're gonna crash. Per GS, investors inbound were elevated all day yesterday, especially across semis in the AI ecosystem, with some growing consternation on what to do from here, given the proximity to year end. Everybody's long as fuck right now. I told you that yesterday we had put gamma in the market, and they began to buy puts. We want to see that. I've got another note here. Option traders become more cautious and have increased their put protection below 6,000. Thank you. Appreciate it. Want to see it. We can go higher. As the market was not able to stay above critical gamma support yesterday briefly. Volatility has lifted off the floor at greater or equal to 13% recently, is currently trading at 15.7%, 1.9 points since Friday. This increase in volatility is unusual at this early point in time, despite expiration, it is a constructive sign that NVDA up 2.8% is trying to turn around. Overall, we don't expect much movement until FOMC. The main level to watch is 6030. We knew that held this morning. SPOOs now squeezing higher, 605.72. This is the time to take your trade off, collect your money. We could extend higher to 606.40, but this seems like a nice place to take the money and run at 10:30. If you have the chance, take your money off here. Let the FOMOers get in. We have more room to run to the upside. If you watch your chart down below here, I'll make this bigger so you can see it. That dotted white line right there, we're not quite there yet. I'll just make it a solid yellow line so you can see it. There you go. If you want to jump back in again, though, actually, I'll draw the line up here for you and SPY too. It'll make it easy. So there's R3. That's this white dotted line up here. That's the same line that you see down below here, and this white line right here. Here's your R2 cursor right there. SPOO's back to 605 again. How we missed you, 605 and 604. Some more notes for you this morning. U.S. retail still buying Tesla and MicroStrategy. UBS's retail market making clients had 75 million of inflows led by Tesla and MicroStrategy, and volumes that were up 42% versus this year's daily average. Tesla had its third largest inflows this year at 30 million, while MicroStrategy had inflows of 18 million. The daily volumes in dollar terms was the fifth largest this year and only surpassed by volumes during the August volatility, the U.S. election in the first day of the trading year. We're back to that June, July, August trade. Which I've been hammering the desk about now for weeks and weeks. They tell us afterwards, of course. I guess you need to read it from the news, though, to believe it, and it's always after. Quick peek here. SPOO's now trading 605.78. 3-trigger cluster building right now on a 1, 5-minute, half-hour, and hourly basis to the upside. 1-minute trigger crossing. Watch that R1 down here. On your chart below, I'm going to now start to work on Qs, IWM, and DIA. I'll work on them quietly in the background, and then I'll show you all 3 charts. I'll cut and paste them, post them in the Discord for you. As a matter of fact, let's take a look at this together as we crank above here. We're gonna look at some of these premium Discord bots. Ruh-roh. Screen capture. Let's see if I can do that one right there. There we go. You guys see all that? Okay. See what's going on with SPY. What do we see here? More call buying here, but there's a little bit of rounding off above here. It's a little bit of increased put buying as we make our way higher. So just be paying attention to this. Put buyers trying to get a little more anxious here on SPY. Let's do market tide. There we go. Market tide. I'm so lazy. I'm so fucking lazy. Let's take a peek at market tide, see what's going on with this. See how much higher we can actually go here. Market tide cranking right now. Put's getting annihilated right now. That's good to see. Get one more crank out of this. Might not even get a pullback here. Just trade straight up. Breaking higher with a big bull cluster down here, trying to close out some of this gap right here. You can see this gap just above here at 6075. A little bit more room to run on that gap. This is a gap left behind at 4 p.m. on Monday, all the way straight down here. I close all that up right now. Go back to the trigger screen, see where that gap is. Right up in here, Monday, 1600, right up in here. The gap. Right in there. There's that gapage right in there. Just trying to close that gap out right there. And see it. Right up in there. Lower that down. Just leave that up there. Close that gap, come all the way back down to the 1 minute trigger. Just keep pushing that over. Just a little bit more room to go. Target up top would be 6074.02 in SPX. Market tide's still bullish. There is some flows coming in for puts. Just note that there are some sellers up here. They're going to try to come into the market as we come in to close this gap, trying to roll us down to the downside. Why is that not putting me in the market chat? There we go. Watch that blue bar above. Watch my finger right there. Starting to close the gap. Watch out for a red wick down once we close that gap. Keep your eye on that 1 minute trigger right here. I'm going to pull that off here for you guys so I can work on cues. All gas, no brakes here. Breaking through. This is where the gap was that I could see. Close to where the gap was right here. SPX says it's slightly higher. So I guess I got this wrong on SPOOs or SPY. There's more to go up here. Gap on SPX is at 6074.19. My God, SPY wants to fuck right now. Q's wants to fucking destroy too. Q's looks bullish as fuck here. Jesus. Looking at Q's here in the background. He wants to absolutely rip faces off. Like rip fucking faces off. Q's coming into its last known resistance at the moment. We're gonna go to Pound Town. If you're sitting next to a bear right now, right? Just look at him as you're just gonna rip his face off. There's gonna be a back test, but you're gonna rip his fucking face off on that back test, and we blast off for 5 straight fucking days. It's gonna be fucking stupid. Trading R2 right now, 606.40 on FOMC day. Smashing into R2 like nobody's business. Still have not closed the gap. We also have 607.44 to the upside, 606.763. Smashing. Ripping the dress off of volatility today. Oh, yeah, baby. Show me some of that VIX 9 day. VIX 9 day trading 1253. VIX testing the 30-minute and hourly trigger here. Getting close to a top. This is VIX 9 day right here in the bottom right hand or the bottom left hand side of your screen. VIX finding some support as we begin to break to the upside.
Crude futures rising by more than $1 a barrel to session highs after the EIA data shows a draw in US crude stocks.
This is VIX 9 day right here. This is the hourly trigger. Looking for VIX 9 day to trade 1232. Maybe get a nice squeeze and then down. Option sellers don't want to see the breakaway, do they? They're like, just make it an OPEX and end of the month, baby. Do whatever you need to do. We just want to sell the 23rd. Bring it all back down. Friend a month, baby. I got to keep my options. I got to get my hold these options. I got to sweat the next 5 days. All your option sellers are going to be panicking for 5 days. Always love it. They'll come out of the woodwork on the 26th. They'll be like, woo! Still in the range, baby. Some initial sellers coming in on Qs. My God, look at that weekly candle on fucking Qs. Jesus. Spoos is like, fuck you, 3 weeks. Come all the way down to 515, it wouldn't even make me blink. Qs are like, you could go all the way down to 477. Still bullish. Terrible. Filthy. Disgusting. There's a bear out there somewhere, and he's just like, I can't wait till all this comes back. Can't wait to sell this fucking thing. Shit all over the bulls for a couple weeks. Take it all back. Initial sellers coming in here on SPY. You're going to get that reaction. Qs are at a place where it's natural sellers are going to step in on Qs right here. Keep your eye on this 1 minute trigger right here. You kind of got it, didn't you? Where's that? Let me get rid of this here. Here. Well, let me switch back to this. VIX 9-day blooding down at 1249, but it is coming into some kind of support. There's a wick here, and we've got the cross of the 5 minute trigger right now. 5 minute trigger is crossing SPX, not SPY, but SPX. Could see a quick move down. Be careful of just like a quick move down. Watch this where my cursor is right here. You're a bull, you just want to be holding this green line right here. Coming to the 11 o'clock hour, bulls in control of the market right now. Trading 606.22. Same as last week on Qs, right? Just daily, daily buy, daily buy, daily buy. Relentless. Same as last week on Qs. Buy, 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 buy. You should see this Qs buying here. Here, let me show you guys this really quick. Spot up, vol up, baby. Bottom right hand side. Let's go to the Qs really quick. Just watch this. Daily, weekly, right? Daily, 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 daily. Now on a four this is a 4-hour chart here, right? Reinforcing it again, right? 4-hour right there. Another 4-hour right here. And this one in particular, look at this one right here. We can look at this closer. It's a 4-hour basis right here, daily basis, right? Oh, let's go back to Qs. Close that up. Just like buy, buy, buy it all. Must have, must own all of it. So look at this down here at 533.56. All known support. 533.56 is what you want to know. Here, hold on here. Just right here. Buy, buy, buy. Buying all of it. On an hourly basis on Qs, this is where that like sellers, coming back in again on these sellers, right? This is the other day, coming back up again. Get that quick, clean wick right here. Tried to come in and sell it again, right? Like there's like regular sauce, right? Make that a yellow. Trying to hold the line. If they can't hold the line, you know where we go, right? All the way up here. Party time, right? Just party time. Explosive move to the upside. All-time highs. Let's do this on a 30-minute basis. Qs right now. And take a look at this velocity here. This velocity is going up now on Qs. We're looking for like an explosive move here in the Qs. It's a 30-minute basis, 30-minute time frame on the Qs, looking for an explosive move to the upside. Now, do we get like shit on by the Fed, right? Trap you in here one more last time, then boom to the upside? There's a big question mark, right? It's 11:02 in the afternoon. They shit on your parade over here. Maybe you get a little pipped up, right? Take some off, let them sell you back down, and then bam to the upside. 534.91 for a rebuy if we get rolled over on Qs. 534.91, 534.54. They're down here waiting for that buy again. 534.91, 534.54. One more up here, too. So they get y'all teased up. Get y'all teased up. There's one more down here. And then up, and away. Bullshit candle here for the Fed. Get that hawkish Fed. Back down here, ready to buy. I'll give you a better target. 533.56, 533.72. Mark it on your charts. Just an alert. Send alert right here. That alert on trend line crossing down. Great. So if you get any kind of bullshit, you're drinking the bear Kool-Aid, anything like that, squeeze it up, straight back down on you. About 2 o'clock, 2:30, 2:45. If you want to buy puts for the Fed meeting, you want to know where to close them out, somewhere in here. Trying to roll us down now. Got the new high at 10:49, but no new high at 11. There they are. They're holding this, no problemo. Be careful of anything below 605.96. Thanks, Rambling Gambler. You want to take a quick shot of this? Hold on.
We'll hear TikTok's challenge to the US ban.
You want to take a quick shot of that? This is, call that 2:30, 2:45 right there. You want to snip that at home. A little bit of a fake out down here, bam, all the way back up again. Now, we can't escape this right now, but just if you want that doom and gloom right in there. That's the cues, by the way.
So the TikTok ban in the US is slated to take effect on January 19th.
VIX 9-day turning around to the upside right now. Move that one over to 11:30. Remember, this just has to hold. Still bullish above that stops. Buyers still saying that they're here. Nope, that's wrong. That's wrong. That's wrong. No guarantee in this move to the downside. It's just if you break, if we begin to break this here, you just watch. You're watching for this right here for demand to leave. They're still buying it right now. You can see that wick. So don't be all bared up yet. Just want to see if they're going to send this down or not. Their 15-minute right there. Die, spoos, die. Well, they're really trying to break it right here. You see it? One minute is flattening out. Coming more neutral, not bearish yet, but definitely neutral, not bullish. Atlanta Fed, GDP now, Q4, 3.2% versus the last 3.1%. Watch out now. They're going to roll this fucker down. If you try to get out here, they'll give you one more green candle before you have to get out. They'll give you one more out. Then you'll go down. Hopefully. And you'll see the exhaustion from buyers here. They'll give up right around here. SPX looks like it wants to backtest the 5-minute cross of the hourly trigger. Hmm. You think there might be some rotation right now into IWM, maybe? Watch out for rotation here in IWM. Into IWM. On a weekly basis in IWM, snap a line at home on 225.39. Set an alert on it. 225.39. As an area of interest to long. Blood and Spoos right now, 605.60. If you look at, excuse me, here's SPX rolling down to trade into the 5-minute turn right here. Watch this 5-minute come up through. Let's see if we bounce here and go higher. A note here, VIX 9-day finding its bottom right here on the hourly trigger. Blood right now in SPY. Blasting all the way down to R1. SPX has more down to go. We can trade all the way down here to 605. Watch my cursor right there. Go all the way down here. Keep your eyes on SPX gamma down here. Switch this to a 1 minute so you can see it. SPX testing the cross of the 5-minute trigger. Whoop. Back over there. SPX trading all the way down through its hourly trigger, 5-minute trigger, and into its 30-minute trigger here. I can't even say zero dates here, can I? If I say zero dates, you guys are all going to buy zero date calls. You're going to fuck me. Buy zero dates right here. I just can't say that shit because you guys all buy zero dates and the dealers fuck me. Hold on, I gotta finish this IWM chart here. Hold on 1 second here. I want to see fucking IWM just rip faces off today. Badly. SPX now blasting into the 30-minute trigger, coming down into the hourly on SPY at 604.87. Next hourly break is right here. Almost the entire move given up. That was like a 15-minute, what is that, 11 o'clock? It's 11:17. Pretty nice move right there. Tip tail, 0.27%. Known support on SPX right here. Sitting at 6055. Gamma bar is at 6040 on SPX gamma. Watch out for a squeeze and then a move lower. So you'd see like a squeeze like so.
Russia moves advanced weaponry from Syria into Libya.
Where is that? Right there. Squeeze up here.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Watch out for a squeeze and then a rip lower. Unless they bloodbath this fucking thing straight down. It's possible. They go straight down here. I don't think they're going to do it, but if they do it, god damn. I think squeeze and then slam it down there. Still sell pressure on a daily basis on IWM. That's because I'm on a 4 hour. Oh, 4 hour. Go back to the 4 hour. Uh, 2 p.m., right? 2 p.m. right there. Thursday, 1 hour. Or Wednesday at 1400. There. on we're gonna go bottom right hand screen here. We're gonna take a quick peek at IWM here. Here's IWM on a 30-minute basis on IWM. Well, there's like, so IWM, it looks good on an hourly basis, but it's daily looks like shit. It doesn't look good. I don't like seeing that. I mean, you could make an argument that IWM like it doesn't go that negative on its daily basis unless something really bad happens. It's not often though that it goes too negative on its daily velocity on a 30-minute basis, but it is starting to look kind of bad. I don't like that. I do like seeing us negative on hourly basis. So just if you see any kind of, my thought process here is if you see some kind, and you've also got another thing to look at here too. On a daily basis, just traditional trend, like one here, here, and here. There could be an argument made that to go lower because of that daily velo, it could be even lower. See that weekly right there? Let's see how all that matches up. If you get a hawkish Fed, if you were to get the hawkish Fed, they wanted to wick you down here into this weekly. Snap a line on 225.34. And then, but even here, right? Just watching right here on a daily basis, they were buying this yesterday, like sell the volatility on IWM into the close yesterday. They bought it yesterday, right? Buy. And they're kind of down here doing the same thing this morning. You're not seeing a lot of like production out of IWM, but like just watch that. They bought it here, real sneaky, right? Here, back here again. Maybe you can get the wick down there, maybe, but I'm still doubting it. This is cheap, like CJJ, Captain Jim James, cheap call lot. Or maybe a hawkish Fed, but watch out for a rotation into IWM out of like SPOOs or Qs or something, because this is underperformed today. So in an hourly basis, they're buying it here at 11 o'clock. You can see them buying it here this morning, right? No production yet though today out of IWM. Maybe a quick rotation. Check the unusual whales call buying and see if there's a bunch of call buying going on down here, accumulation down here for a fucking face ripper. And that face ripper should result in a monster fucking move, like close all that bullshit, 238, 236, and I see even much bigger highs, like an all-time high over here down the road. So there's like a monster move here coming out of IWM. Let's keep your eye. This is a good trade right here. And when IWM moves, it moves. It fucking moves. So you could even make the argument that fuck you, we're just gonna stay right there. I'll give you like the cheapo. I'll give you that as a cheapo. A wick down there. Yeah, just like monster. Whoop. Fuck you. Whoop. I doubt you even get that. I'll play nice right there. I'll go halfway with you. And a good thing to do, though, would be to, just 228.59, 225.57, a little bit of excess down here on some bullshit doom and gloom. Here comes the squeeze on SPY to the upside here. See if they can pin this shit down for one more move lower or not. See if they really wanted this. They really wanted to take all of this. So we'll move the 12 o'clock. Move that over now to 12. Let's see if they can hold this or not. This is where it started, back here. Turn to the scene of the crime. Here's your 15-minute. This is 11:30, 12 o'clock. Put this over here. Hold on. See if they can get the rest of that down over there to 12:30. God damn it. Come on now. SPX Gamma holding just fine. Triggers all holding on a successful backtest. Q's being wicked right now. Volatility winding up on VIX. See the stops up here? If price is able to get above, they're going to run these fucking bears over and moon this fucker. So let's watch this closely here. Come on, man. Get that fucking thing out of there. Sorry. I got so much shit on the fucking. You got so much shit over here. I don't know what the fuck I'm doing. I was like, it's like, no, sorry, bro. You got a line and a line and a box and all this other bullshit. You can't move anything. I'm gonna find out right now what happens. Now, this downside move here at 12 p.m. If price gets above, whoop, the way is higher. And then we'll switch our viewpoint. We'll be looking for the trade to 607.41. One thing to note here, if you're a bull, do not get caught. If you are a bull, do not get caught in this bullshit here. They fucking rope your ass in here till like 2 o'clock. Bullshit, down move, then higher, that kind of shit. Don't get trapped in here. Do not get trapped in here. If you want to take that bull move up here, you want to see the break above, back test in the 1 minute trigger, and then we can start talking about that. But even then, you can get the real fucky part here is if bulls have this, like you'll break above, get the new high, right? Come back down, get the 1 minute trigger, right? Think you're going all the way up here, and it's like, boom, fuck you, buddy. 2 o'clock. So you're like trapped in this whole fucking zone of consolidation, the finger trap of death. Awaiting news. It's right here. You can see it right here. So it's like a I don't know, call it a bull trap, I guess, of consolidation. You can trade it on a 5-second chart. That's about it. All right, what else I got here going on? I think that's it. I did Qs on IBM. I didn't do fucking. We gotta talk about. Should we talk about DIA or what? I haven't even looked at it yet. I was watching. I was reading a headline. They said 2 days ago. I was like, God, dude, DIA. I haven't seen that shit for a long time. I like went back and looked on Sunday. I'm like, it's a long fucking time. Not quite that price action. And then and I spoke about it on Monday. And then yesterday I read a story and they go, we haven't seen that price action since the 1970s. I'm like, yeah, dude. I haven't seen that. I was like, I count candles. I'm like, I go back and look at all this shit, like daily candles. I'll go back and look for patterns, just like this price action. I've seen this before. How far back can I look until I've seen this close to this price action? I haven't seen. I went back fucking decades and didn't see it. Then yesterday they came out and they're like 1970s. I'm like, God damn. Like, fuck. Like 1970s? 20 years? Was that 19? Or, yeah, like, that's fucking 40, 50 years ago. Fucking Christ. Well, I on Monday I was talking about it, and I was like, it's draining money to fucking long elsewhere. It's like shifting money. Like, oh my god, I got money sitting in Clorox. I gotta put it to work. Let's fucking buy Mister right now. I gotta own it all. We'll get back to Clorox later. Max fucking long. By the way, we're gonna crash. Fuck you, we're crashing. You're fucking moving all your money from Clorox and goddamn fucking Bitcoin. Fucking Tesla and fucking Qs. You lying motherfucker. Sorry. Beep, beep, beep. You're just fucking moving it all into fucking... You know what I'm saying, Der Games? Like max leverage long. I think we're going to get roped in here. If I had to guess, the GOAT, Mr. Yen, always says, like, don't fucking get caught in the middle. And that's we're right in the fucking middle right here. So you're all going to be slamming the call put button, right? And these dealers, they're like, oh shit, I'm going to fucking Aspen. I got a plane out of here to Aspen for Christmas. My wife and kids are there without me. They're like, I'm gonna all these fucking gamblers, they're gonna be buying puts and calls right now, and I'm gonna drain the fuck out of them right in at 2 p.m. So watch out in here. Bunch of fucking gamblers. Did you guys just rotate out of fart coin? Now you're in Luigi coin? I saw this other one, some penguin coin. Someone put in like $6 and made 30,000. I'm like, what the fuck? I was thinking about that, whatever that penguin coin was. I'm like, oh god, I'm like I always buy like every time something bloodbaths like Doge or wow, fucking ETH, I don't care, Bitcoin, everything's like bloodbath, like never coming back. They're gonna crash, everything's gonna die. I'll go buy it. One of the ones that has not come back for me is I'm still angry about it. Is Wrapped Luna. I bought that fucker when it was like 0.0, or it went down to like 0.0000000. It actually made me a bunch of money briefly, and I fucking wasn't paying attention to get the fuck out of it. It made me a bunch of money, and then it went straight back down again to the depths of hell. This is like depths of hell. I want that one to come back one day. I'll wake up one day and it's like $1. Just one fucking dollar. I'll be a fucking billionaire. Remember, this is where the bulls were right here. This stops right here. Come back up into the scene of the crime. Back to the scene of the crime. Bulls are all pissed off. They're like, God damn it, they brought it back. All the way back to the scene of the crime now. These fucking bears are like, you get your scene of the crime, and then we're all the way back down to the depths of hell. Get out now. VIX 9-day rolling over to recheck a cross of the 1 and 5 minute trigger for volatility. Now, what time is it? 11:39. I'm gonna take a quick break. I'm gonna leave the stream up. I'm gonna lift some weights. What else I gotta do? I gotta lift some weights, take a piss. I gotta drink a scotch before Jerome comes out and talks. Just a note to you out there that we're gonna have live coverage of Jerome Powell. I think I actually tested it this morning. Spent a half an hour working on like the layout and the formats, and I played a video and all that shit. So we'll have a nice little video with Jerome Powell. We'll take a poll, see what you guys think about his tie. We'll go over some of the when I get back from this break. The stream will stay up. I'll have something on for you, and I'll put the news squawker on. Get that on right now for you.
Disconnected.
Here, we'll put the news squawker on. Keep you guys busy back here. We'll talk about TikTok, maybe TikTok. I like how Trump's like, well, I don't want to stop TikTok just yet. We'll talk about Trump maybe a little bit. When I get back, we'll roll out some discussion about the FOMC today. I do expect 25 BPS in cuts. Should they cut? No, they should not fucking cut. Are they going to cut? Yes. We'll talk about why. We're going to talk about cuts into June, July too. The ramping of cuts. We'll talk about all that stuff. But I will come back from the break. We'll chat about what to expect today. We'll talk about the hawkish Fed cut, all that kind of stuff. All the shit's been floating around. And what else? Just know one thing. We're gonna kick the fucking doors off volatility. We think. Kick the fucking doors off the vol curve. We're coming into the holidays. Happy holidays. Relax. You guys are like, we're crashing the stock market. Everybody's got their laptops at home. Everybody's on Fire Island with their laptops. All Wall Street's ready to fucking hit the sell button all at once. Black Wednesday. I know, I just want to get paid. I got like so much fucking money in fucking Jan 17. Just want to get paid. So I'm like, I lost money last week, lost money early this week. Been losing money. Like, I've been taking my own winnings and just burning them. On fire. Why am I doing that? Do you know why? I know why. Because my fucking brain, I've already paid myself for a trade that have not fucking closed yet, which is bad. You should not ever do that. That's what I'm doing in my head. I'm making so much money in this trade, it's going to be stupid. Start gambling. Why am I gambling at Christmas time? Should not be doing that. Dude, Boot Barn, love that place. Love Boot Barn. Probably the best. One of my two favorite retail stores right now, Boot Barn and Sierra. If you're going to go to Sierra in person, place is fucking awesome. What else we got to do? We'll talk about my liberal tears today or something. All right. I'll be right back with you guys in a few minutes. Do you guys want me to draw some squiggly lines or anything like that? I'll draw some for you. Ping pong right there. Failure to get the new high. Back down right about there, right over there. Time is it over there? 12:30. Fucking put the vol control gang. There's maybe a little squiggly in here with those stops. Just note that little fucker right there. Yeah, I should redraw all that shit. That's like fucking crayons. That looks like a hot fucking mess. And you get the picture, right? See that stop thing right there? They're going to try to sell you down on that. Come back down to that 1 minute trigger. Maybe get you to failure down there. Grind your ass out. I'll be right back. Give me like a few minutes. I'm still losing my voice here. You like the lines? Looking lines look like dog shit. Hold on. Let's get rid of that shit. It looks like fucking look like a goddamn marine or something. Right there, maybe. Failure right in there somewhere. Back down right there. Just grind your ass out. Should give me about 15 minutes time, right? Then you fucking hit that 5 minute trigger and just smash it. This thing right here was like right around there. This is the scene of the crime right here. Roughly right in there. Just note here. I want to show you guys something here. I always like simplifying shit, right? Is the way lower? We're gonna find out, right? Back test to see if the buyers really are here. Oh, god damn it! Just a quick note here. So, SPX gamma, right? I want to show you this really quick. So the thesis here would be: you come back down to test, right? You take off here, right? Come back down to test this cross of all these triggers. All right. Bears get a chance to sell us down, right? Wham. Get that low that they're looking for, right? They weren't able to do that, were they? When they can't do that, it tells you that the way is higher. So if that's the case, the way is higher. We have an event too. They could ping pong us in before we get there. But they're telling you, no, the buyers are here. So if buyers are here, we're going to go up there and try to test that. Come back down, right? Test all that bullshit right there. And at least take that out. Okay? Maybe not that for now. Maybe they blast us back down. That's still that zone of consolidation. But the way is still looking higher right now. Things look good for that move to the upside. So things still good. Bullish here overall, over time. Way is higher. We haven't given this up yet. Buyers still here. They're here, and here again. Bears didn't get their way. So that's good to see. But just keep your eyes on, like, this gap needs filled right here. Has been filled. That's the breakout for us. What this breakout, though, still depends upon coming into OPEX. Still depends upon coming into OPEX. We'll talk about some Vixpiration stuff, too. I'm assuming you guys think Vixpiration means we're going to get a bloodbath day. I don't know if that's the case. Thinking at the spot up, vol up trade. We'll talk more about that. I talked about it on Monday. We'll talk about that, though, too. We'll look at last year in December, what happened, too. Something very similar. We have a lot of the same playbook going on right now as last December. We didn't get that down day until right around that 23rd. Right around that DivX, the actual issuance of it. So we'll chat about that later in the show. Up there for you. So you can see that right here. And that kind of looks like, it kind of looks like to close that gap is like right there. Kind of, I think it's right there. Somewhere in there. You could see us come back down though. Move that one over. This is 12:30. That's 1 p.m. Like the horrible part was it would be if they just grind, you know, if they like just like back test the 5 minute, back test the 5 minute, back test the 5 minute, back test the 5 minute. Fuck you. You're still trapped in. Close the gap over towards 2 o'clock. And these could be down here. Just grind, 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 grind. All right, I'll be right back.
Canadian dollar weakened 0.2% to touch a 5-year low at around 1.4334 per US dollar. So again, I'd say a 5-year low on the Canadian dollar to the US dollar.
I'm about to start squeezing once we get past these stops here. This is where the sellers are, right here.
So the US Senate has enough votes to pass the $895 billion defense authorization bill.
So look at this. Watch this grind right here. See, they just keep taking you back to the 5 minute, just like the grind. Wham, wham, wham. Right? Wham. Back down to the 5, just like murdering. So this is positive gamma, but also murdering the options. Supply, supply, supply. Just enough to murder options. Right back in the middle.
Stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls.
Pizza, we're up here, pizza.
Special offer of Financial Use Pro for a year's worth of our service.
Pizza, please. Not until 4 p.m. No soup for you. All right, just a few more minutes. We'll be right back with you guys. All right, I'm going to step back in here for a minute. We're going to talk about. We're going to chat about the FOMC preview and what to expect here today. Then I'll take one more break. Then we'll have the actual presser. First off, happy holidays to you if you're just joining us here late in the morning. Hope you have a safe holiday. Don't fight with your family and your friends. Don't jump out of your truck and get into a fight with people. Don't be doing that stuff. Don't be getting DWIs. It's amateur hour. Do your best. Be on your best. Any of you out there with family, we're halfway there. That for some of us, for me at least, the holidays begins on Thanksgiving and does not end until New Year's. It's gotten so bad in our family that by New Year's Eve, I just want to sleep. I don't want to go out. I don't want to do anything. I don't want to do anything with anybody. I just want to like stay home, sleep, and eat Chinese food on American Chinese food, on Americanized Chinese food on Jan 1. The holidays are, for us, are brutal. It's like go here, go there, go to this, go to that. Drop the kids off for this. Go to the kids thing. Like, then drop them off for this and that and all this other stuff. Like carting people around, showing up here, showing up there. It's not a bad thing. It's just it wears on you. It's a lot of work. And then of course family. Family of course does. You gotta like placate and be friends with family and play nice and all that kind of stuff. And of course, all that takes work sometimes, right? You don't want people fighting and stuff like that. Then, of course, you got like the holiday decorating, and then it just never ends. It's like nonstop. I got a daughter who's a preteen teenager, and I don't know. Like, I got her some stuff for Christmas. I got her a new clarinet, and I got her. What else did I get her? I got her a new PlayStation. No, I got the other one. I don't know. The other one, PlayStation, like that, new record player or something like that. Microscope and stuff like that. But I don't know what to buy for a preteen, or make for a preteen. I'm doing stuff with her right now with like ham stuff. But like I don't know what to do. Like a teenage girl, like young teenage girls are hard. You like ramen and you like drawing stuff. Okay, got that. And you like video games and you like what else? What's the other thing that you like? Anime. Okay. So, I kid you not. So like, I'm looking up anime. I'm like, okay, I'm gonna look up anime cosplay stuff. It's all like adult porn shit. I'm like, isn't there any like kids? It's like incels and adults. I'm like these kids don't care about that stuff. I'm like, what the fuck am I doing here? I'm serious. I don't know what the fuck to do. So anyways, talking about incels and anime and fetishizing women and kids. I'm like, Jesus Christ. Couldn't even find like trying to look for costumes that like kid could wear. They got the cool hair and all that kind of stuff, but then it's all like fucking adult shit. I'm like, the fuck is this? Like kids like anime today, or at least in the US. We had Transformers and GoBots when I was a kid. I actually owned real Transformers. I used to have to go to China, what they call it in Boston, they call it Chinatown. We go to Asian stores and my father would buy me those toys. It's the only place you could get them. You couldn't get Transformers in the store. When I was a kid, you couldn't. You had to go to the Asian markets to find them. She does all that. Yeah, she does drawing. She's in drawing. She's in art classes. She's in robotics right now. She's in STEM, and she's got a concert coming up here tonight. Shit, I forgot all about it. I got a concert tonight. I actually have a concert for my daughter. That means I have to go get flowers. Shoot, shit. Tonight, I have a concert tonight. As a matter, it's at 6 or 6:30. I'll take some video of it. I got a bunch of stuff I got to post. I haven't posted a bunch of stuff recently. I didn't post stuff we did, but a bunch of stuff. I didn't post pictures yet of the car either. I think I showed them to Joe, but I got to post. No, or Binky. Show them the Binky. I think I sent the pictures to Binky. So I'll send some pictures out and what's been going on for the holidays. I've just been really fucking busy. Like busy with this, busy with that, busy with the market, busy with. It's been crazy. It's like holidays. And it's like nonstop, never stopping. Just keep going, keep going, keep going, keep going. Crash, keep going, keep going, keep going. So if you're out there and you have family and you're busy, I understand. If you don't, hopefully you can take some time for yourself. some downtime, some relaxing time. Focus on UFOs, baby. That's what I think it is. I think it's two things. Or I think we talked about this on Monday, but I think like two things. The alien thing is mostly like people have free time on their hands. People coming home from school, people taking time off from work, and it's like a distraction for people. The second thing was what I was saying the other day, which was on Monday, which was the Blade Runner reference was when will you become comfortable with seeing that many aircraft in the sky? I don't know if there's real aliens or not. I don't think there is. And then there was the whole thing about sniffing out nuclear material and all that kind of stuff. I think Macbeth or something came out and shit all over that. And then some guy that claimed he was an insider just stole Ryan Macbeth's shit and talked about it on Joe Rogan or something like that. Fucking bunch of fucking grifters everywhere. So my higher sources, I'm gonna go on Joe Rogan. I'm like, that's fucking CIA plant shit. Like, the fuck is that? Fucking like, god damn, craziness, pure, live in a world of insanity. At any rate, hopefully you can keep yourself busy with it. Go on like our UFO or our aliens or something. Those people are going bananas right now with the UFO stuff. Seems like everybody needs something to pull them away from reality, I guess. So anyways, FOMC preview. The odds of a rate cut are at 95%. Be aware of that. 25 basis points, right? It'll bring the Fed's funds target rate range down to 4.25%. The Fed funds rate will go to 4.33, and GC between 4.40 and 4.35. Now, saying that, I'm going to quote BBG here, right? There's a reason why the rate cut odds are not 100%. In a Monday post on X, Nick Timiraos, the Fed's mouthpiece, right, had a pretty hawkish take in his own article focusing on whether or not there should be a rate cut at all this week. Quote, the market sees a 25 BPS cut this week as a near slam dunk, Timiraos wrote. But with policy rates now 75 BPS below where they were when the labor market looks wobblier in September, there's less conviction around cutting. Yet right now, either a cut or a hold could be justified. So, the thing here would be and I'll read this more to you right now. I'll read Timiraos' note to you guys. Powell is again trying to find the right gear for monetary policy amid signs the labor market is less wobbly and inflation is a touch firmer than they appeared in September. He faces misgivings from some colleagues over continuing to cut and less conviction from others who strongly backed those first two moves. You remember they were trying to arrest velocity. That's why they did the 50 BPS cut. And this last rate decision, we had some dissent. You should see more dissent today in this rate cut. And you might see language. Now, the thing is that the Fed hasn't done anything without prior warning. So if he did not cut today, that would be a shock to the market. So I want you to be aware of that. Vol surface is high. I showed you IWM, that bottom on IWM, that supposed move to the downside that's still screaming. I'll show it to you right now. So just get all the bearishness out of you. Just this right here. Market shock. You can erase all that right there if there's no cut, right? Now, the Fed is claimed to be non-adversarial. Every once in a while, Jerome has been adversarial. He got stinky about the politics thing. Slammed Timiraos and the market. So he can do that. It is Christmas, though. I don't see him doing that. I don't think he does that. I don't think he shits on your holiday. But I do think that there's an opportunity today for a language shift to introduce a slowing of cuts. or the threat of a slowing of cuts. And the reason being is we have the SEPs today. So the economic projections come out. And there could be verbiage or wording in there today saying we have to look out for a rise in inflation. Now, I know you got to take off your fucking Trump Main Street hats here. Please, because you're going to get run over if you don't. Got to take off that Main Street hat for a minute. And Wall Street does believe that Trump is going to create inflation. I see it in discussions I have with my Trump supporter friends. I have a lot of Trump supporter friends, believe it or not. I'm an open guy. I'm a pretty easy guy to get along with. We have a lot more in common than you think. He's a populist. But even my Trump friends are, like, the eggs cost too much. Now the argument's switching to, well, he's going to have wage inflation to combat it. I'm okay with higher priced eggs. And you can do that all in your mind, all that you want. But as it relates to the market, you can tell yourself whatever you want to tell yourself. I'm telling you that for sure that Wall Street is pricing in more inflation coming from Trump. Okay? So if you're getting your outlook into Q1, this could get more hawkish as we have these rate decisions and we get into each of these new quarters. I told you this earlier this year in March. As we get into the fall, you'll hear more hawkish tones, right? So you're going to September, October, November, and you're going to hear this cacophony, or you're going to hear all this talk increase, become more and more hawkish into next year. It'll culminate either in Q1, 2, or 3 of 2025. We have a historical trend, too, of inflation that is not Trump or Harris's fault or Biden's. There's a trend, Larry Williams talks about it, where inflation should be bottoming out next summer. So regardless of who the president was. As a matter of fact, Wall Street's take on this was we could get there quicker with Harris from not spending than with Trump spending. So there's an eye of the needle where the market can boom next year. There's when inflation's on the rise, there is a moment where the market can bubble, basically, where Harris would have maybe sent us into a recession or depression quicker, and it gets postponed for a brief amount of time with Trump and the spending of money and the rise of inflation. We've talked about this in the show in depth. Today's not the day for it. We've done it. It's like regurgitation at this point. So you could see, or you should be starting to see, a change in tone from the Fed. This is the hawkish cut, where you start to see a language change, inferring that maybe we pause more cuts. And that's the idea that inflation would begin to rise, even if it's slowly without velocity, but become, or velocity would increase as we get closer to summertime, which would cause the Fed to maybe raise rates to combat that inflation, right? So Powell's again trying to find. So now Timros is saying, surprise, no cut. I don't expect that. I don't think he's going to do that. But the language could be the excuse to jump the market. The language change. So pay very close attention today to not just the cut, but the language changing even more. We had language change the last cut too. They start to introduce all of this stuff into maybe we're going to wait and see now. Wait and see what Trump's first 100 days are. Wait and see what his policies are. Wait and see what he gets passed into the summertime. Note that a lot of this stuff, I've told you this before too, where past Fed presidents have said they don't know if they actually impact these business and economic cycles. Or are they amplifying it, but not quite the reason behind these things? So when you have normal economic and business cycles, they can try to time them so they can have an impact on them, slow them down, speed them up. But do they actually are they the actual reason for these cycles? No, and they can amplify these things. Policy can, presidents, House of Reps, Senate, Fed, Treasury, you as Main Streeters, you as Wall Streeters can amplify all these feelings, thoughts, sentiment. So sentiment should shift. Not now, but it should, so pay attention today to the Fed speak, verbiage changes. I'll have them for you here. I will actually show you. And Inu does a really good write-up on this. If there's anyone to be, again, we're going back to Wolf Street. He shows you line by line. Takes him like a week to put it out, but shows you line by line the verbiage changes from the Fed. He makes a post on it. You should follow up with that, with him specifically, because he does a really good job of the changes in language, and then we should get some today. And that would mean like more of that posture of a wait and see. Just sit back and watch as things unfold next year. So Timro's saying Powell is again trying to find the right gear for monetary policy amid signs the labor market is less wobbly and inflation is a touch firmer than they appeared in September. He faces misgivings from some colleagues over continuing to cut, and less conviction from others who strongly back those first two moves. Given current market expectations of a cut, the path of least resistance would be to cut by a quarter point and then use new economic projections to strongly hint that the central bank is ready to go more slowly on the reductions. I'm not going to read you the full story, but I'm kind of on that same. I'm with Tim Rose on this, but you got to remember too. It depends on how it's spun. Jerome is likely going to continue on his path, right, into this new presidency and new Senate, new House of Reps, or just new Congress, I should say, and follow through with his economic policy, and then wait to see what takes place into next year. And it's going to be fascinating. This first 2 years is going to be fascinating. The next 2 years afterwards are going to be fascinating as well. And what happens, how we amplify these things, how they impact the market and the economy, and you out there. Your outlook, by the way, go to tradethetrigger.com. We got a great Discord. We have an outlook coming out for 2025. It talks about you can't time recessions, depressions, and stuff like that, and bubbles, and how high do we go? How do you prepare for those things, though? How do you prepare if we do go into a bubble? If early we go into a recession, or even a Trump correction, or there's a major blow off top, or afterwards we go to a recession, depression, something like that. How you can't time that stuff, how you can prepare for it though, and trade the market up and stuff like that. But that will be released here coming into the end of the year. So if you want more on that topic and this Fed speak and the hawkish cut today, it'll be all in that write up. And I've told you this many times. You're looking at like Hoover, 1918, 1920, and then 23, specifically like 28, 29, and then thereafter. And then like how it mirrors Trump in a lot of ways. He's a populist president, Democrat, Republican, came into a period of time where he wanted to pass certain things, didn't get them passed until the last half of his 4-year stint. All the stuff that he promised, it was too little, too late. Wall Street like ran the fucking market up, like ran it up, and then dumped the fuck out of it on him. Into the last 2 years when his policies actually came into play. So, and he was wrapped into the Black fucking Death. And he was stayed in the government too, and had an impact in the government for like a decade thereafter. Hoover was like impact in the markets and not markets, in our government lasted way after even his presidency. So you should look into that if you can. BBG goes in saying that reading the article itself offered a bit more balanced view, leaning more towards the possibility of a hawkish cut, with the possibility of dissent by one of the FOMC members. In any case, here's what to expect from News Squawk. The Fed will release its latest rate decision at 2 p.m. alongside the latest summary economic projections, SEPs. The Fed is widely expected to lower the Fed funds rate by 25 BPS. Following the recent commentary on economic data, it is almost a certainty that the central bank will cut by 25 BPS, highlighted by money market pricing moving more dovish and pricing in a 95% probability of such an outcome. Regarding the statement and press conference, Goldman Sachs says the focus will be on the relative emphasis the Fed puts on language around either slowing the pace of cuts, language and slowing the pace of rate cuts, or that decisions remain on a meeting-by-meeting and data-dependent basis. Nonetheless, Goldman expects to hear both messages, including an addition to the statement that nods toward a slower pace. For 2025, analysts and market pricing expect the central bank to pause on rates in January, amid some concerns about rising inflation risks, with inflationary pressures potentially set to rise due to President-elect Trump's proposed tariffs and and tax cuts. Now, we're going to get into this really quick. I'm going to interject here in this part from News Squawk. There's the bear case and the bull case. The bear case thinks that the Fed is going to have to not only cut, but increase their cutting into summertime. You want to be watching that closely. If you get, regardless of the reaction today, if we get, forget the reaction today, if you see the Fed cutting aggressively, 25, 25, 25, 25 into next summer, you will not see that bubble trade into summer or fall. You will not. You'll see the market start pulling that Trump fucking correction, bigger correction spring, major down in the summertime trade. But if you see like, we're going to pause cutting rates and all that kind of stuff, that's implying that we're going to spend. It's going to be just like in recent memory, spending that happened in COVID. And there is an eye of the needle where everything goes up. And I also want to talk about this more importantly here, going back to Herbert Hoover, which is the tariffs and the tax cuts. We don't even sunset the tax cut shit until next year, at the end of next year. So there's like a window here where he doesn't have to do a fucking thing about telling you to eat crow. Trump could come back to you a year from today and say, you know what? We want to save America. You're not getting the tax cut or keeping the same tax cut. You're going to have to suck it up, America. And he has a whole year to do that. And the tariffs, right, can be argued but not implemented. And they could come in the back half of his presidency. Like the meaningful ones, the big ones. And that's Hoover. Hoover didn't do that shit until he promised that shit in his election. He didn't get that shit fucking done until the second half of his election or his presidency. There are a lot of commonalities in that presidency and what's expected out of this presidency. You're already seeing the speed bumps out there in the presidency. You've got federal judges refusing to retire. He has to get through the House of Reps that are going to ask for money for their districts to go along with them. And I'm looking at the numbers of the popular vote. It wasn't as big as you'd think of a landslide. So think about that. Obama had a landslide victory twice. And what did the Congress do to him? They hogtied him by 2 years into his first presidential or for his first 4 years as a president. So there's a lot of like maneuvering that has to happen by Trump to get a lot of this stuff done. And he has to get it done by 4 years. So it could be back half. And meanwhile, they run this fucking market up. By the time that shit takes effect, they could be rolling this market down like they did in 1929. So I don't think the playbook is the same, but if you don't get a progressive cuts and you get Fed speak of, well, we're going to wait and hold off on all this shit, we're not going to ramp the cutting into the summer, there can be an eye of the needle where the market actually does super fucking ramp into next year. So pay very close attention if you're a bull, at least. I'm going to say this again. I've said it for many years now. I'm going to say it to you again. You ready? Cuts are not your friend. The longer the Fed does not, or the longer they stretch it out, the longer that they're cutting and adding and cutting and adding, the better off you are. And I showed you prior to today, on different days, I've shown you how they've taken the rates up in previous decades, right? They've ramped the rates, they bring them back down, then they pause, and they go up a little bit more, then down a little bit more, down up a little bit more, down a little bit more. And the market just fucking super ramps when they're able to do that. I've actually showed you historical examples of that in the past. So even if you get a negative reaction today, in a long view, don't look at it as negative. Look at it as just trading. Has nothing to do with the actual stock market and where it's headed. And if anything, I think you get 25 BPS, but if he starts to change that language, and you start to see no more cuts into next year, or not no more cuts, but a cut, then a skip, then a cut, then a skip, that's actually good for you as a bull. I know you don't believe that, but it really, truly is. And I have examples of it. I've shown it to you here in the stream many fucking times. If we have time, I'll show it to you tomorrow again. So you get the pausing of rates is kind of good right now, believe it or not. So maybe not today, but January, February, March, they start spreading them out for next year, and then all of a sudden you don't get rate cuts, and they're chasing with rate cuts end of next year, in a 26 maybe, and all of a sudden the market's just fucking ripping to the upside. So slowing the pace of cuts is good, believe it or not, overall for the market down the road. I know. For 2025, analysts and market pricing expect the central bank to pause on rates in January, amid some concerns about rising inflation risks. This is still from NewsSquawk. With inflationary pressures potentially set to rise due to President-elect Trump's proposed tariffs and tax cuts, attention will then turn to Chair Powell at 2:30 today to explain the Fed's decision with any clues for guidance ahead. But he will not want, listen to this closely, he will not want to front-run any fiscal policy measures from President-elect Trump. He will give blowback on that. I assure you of that. He did it in the last one. Anyone he's going to get peppered with questions like Trump this, Trump that, blah, blah, blah. What about reports of this and that and whatever, spending even more, whatever the fuck they throw at him. He's not going to do it. He doesn't like playing political ball. Don't expect him to come out here today and be like, fuck Trump or this, or Trump's going to blow up the economy, or Trump's going to spend, or Trump's going to create inflation. He already knows that it doesn't matter. He already knows that we're coming into a bottom historically of inflation. Does not matter who the president's going to be. So don't expect that today from Jerome Powell. He will not rock that boat. Pay close attention to the verbiage that he says or that he changes on a potential pausing of cuts in the future. So anyways, recent Fed speak. The dovish shift in market pricing and participants' expectations in the last couple of weeks came in early December after remarks from the influential Governor Waller. The permanent voting member said he leans towards supporting a cut in December and later added that there is still a ways to go in reducing the policy rate to neutral and that he expects rate cuts to continue. Ready for this? Over the next year. Not to be finished in spring, not to be finished in summer, over the next year. He's imparting to you. They're going to try to run this fucker hot into next year. The fraud goes on. And I want you to know that out there too. They will fucking pump this shit until it breaks. If they know something bad's coming, they pump it even more. If they know something bad's coming, they will pump that fucker until it fucking blows up. They don't care. When you're out there in your real life and you think that someone cares about your fucking eggs going to $2 or $1, and they stump on that, no matter who they are, they're fucking lying to you. You think someone's going to help you out, they are not. You think corporations are out there to help you, they are not. You think a politician, no matter what fucking party they're from, they don't give a fuck. Nobody cares about you. Nobody cares about me. We are the plebs. They will tell us this all day long, and then they'll pass a fucking omnibus fucking spending out of their asses. They just did that. So, Waller telling you, oh yeah, it's going to take us a whole nother year. We're going to pause this shit here and there and try to ride this fucker for a little while longer. Get me on the bull. That's Fed's Waller. Meanwhile, as noted above, Fed Whisperer and Timorous over the weekend stated, investors widely expect a third in a row rate cut this week. Officials are ready to slow or even stop lowering rates after that. Perhaps reflecting this wide range of estimates, a few FOMC participants have even begun to suggest that it is possible that neutral is not that far off. That's the Bears. Well, this is still a minority view in the FOMC. It argues for slowing the pace earlier as the committee cautiously seeks the right stopping point. These hints of a greater willingness to rethink neutral are also a key reason that we have bumped up our terminal rate forecast. In a detailed discussion last year on how we think about the neutral and terminal rates, we noted the economy is not sensitive enough to small differences in the interest rates for the data to make it obvious precisely where neutral is. As a result, the Fed's officials' perceptions matter too. Okay, well, I'm reading through a bunch of this crap here. Putting it all together, when the dust on what may be the last rate cut of this cycle settles, the big questions for tomorrow are three. What will the dots show for 2025 cuts? The RRP rate and the balance sheet runoff. We note that the FOMC discussed dropping the RRP rate from 5 basis points above the target range to flat with the target range at the last meeting. Perhaps the goal was to incentivize liquidity to move out of the RRP facility a little faster. But volume is draining on its own with just over $100 billion left as of a few days ago, the lowest since April of 2021. Boy, oh boy, does this not fucking remind me of fucking April 2021. I'm shitting you not. Collapsing down. Last month, we collapsed down out of single stocks into indexes. Oh, man. It reminds me of that, too. One more, like 9 months of fucking super ramp, right? And then a bunch of volatility coming in along the way. Dropping the rate should move overnight rates down a little, but there will be no significant impact. The FOMC will eventually taper balance sheet runoff further, as otherwise it will once again have a reserve shortage crisis a la September 9th, 2019. The most likely scenario when it happens is a tapering treasury runoff and a continuation of agency MBS runoff. There's your last cut, boys and girls. Probably not, but I think personally, you're gonna get. I think you're gonna get that just tonal shift. Get tonal shift the last cut. They'll increase that tonal shift. You'll have the inauguration, of course. We've got. Let me see here. This is fascinating too. You get the inauguration, I think, the 20th, and then you get the Fed meeting on the 28th, 29th of January. So it's all like, it all lines up, right? It's always like all these dates always line up, all this shit. The Fed meeting wasn't before the inauguration, right? It's after the inauguration. Whatever the pen comes out and starts whipping the pen around, you got a nice week, solid week. So that January 28th, 29th Fed meeting is going to be a big one. Matter of fact, that Jan 17, love that date. Jan 17. So January 28th, 29th, we'll know more then, won't we? And then we've got the next week. I think we got another meeting in February and then March. So get the language going right now. Prepare people for it. I don't think you get I think you do get a rate cut in Jan 2, but I think Feb you don't. I'd say February, March you don't get a rate cut. Or they pause that shit by that point. But we'll be ramping up. We'll be ramping into like the springtime, and then you'll get the crash, not the crash, but like the big correction in the spring. Then you're gonna get a nice one in the summertime. Head into the summertime doldrums, and then we'll see what happens into September and December. I think we super ramp. So you guys wanted that October Black Monday, right? That was 1929. That was October Black Monday. I think you're gonna get it earlier though. I don't trust fucking Wall Street at all. We're not there though yet. I haven't seen anything on. I've seen it on single stocks. I've seen. I see single stocks divergence on monthly and quarterly. I don't see it on the indexes yet.
And President-elect Trump agreed on their joint ambition to strengthen the close and historic relationship between the UK and the US. This is according to a Downing Street statement.
You got to remember too that these are elephants. It takes them time usually to get out. It's a process. It's not overnight. I don't expect like Black fucking Monday this week. I don't see it at least. It's not on my radar yet. It's going to take them time. I think it takes them months, 3 to 9 months, somewhere in there at minimum. At minimum, 3 to 9 months. In the meantime, the market can explode, literally explode to the upside. There is that potential for that to happen. We'll pay close attention. If they stop the cutting, if they do more pausing, right, or even rate increases here and there, they can extend this market. They can. They really can.
For our real-time service.
Diddle in the middle, baby. Okay, so it's now it's 1:14. I'm going to take a 15-minute break. I'll be back with you guys. I'll be back with you guys like 1:45. We'll switch. We're going to switch over the format of what you see on the screens here. I got a format just for the Fed rate decision. I'm going to have Dixie up for you. I'm going to have TNF up for you, and probably Qs and S&P 500. You'll be able to watch. We'll do VIX 9-day, I guess, Dixie, and maybe the yield, and then we'll do S&P. We'll do S&P 500 Qs or something like that. So from 1:15 to 2, or from 1:45 to 2 p.m. And you're gonna have the video on the screen for you, and we'll do the presser. I'll get the press release at 2. I'll post it in the Discord, the paper copy of it. We'll get a new Squawk is going to give you a breakdown of what everything means. And then at 2:30, we'll also do the presser. Now, if you're looking for some expectations, just to wrap this up right now, really quick, you're looking for some expectations here on the move. Okay, there are 2 important places here. You have the 2 p.m. right here. Okay, and then we've got another one for 2:30. I don't know what the fuck this is right here. And we want to talk about expected moves, upside, downside moves, okay? Just want to show you a couple places, some important places. Peter, we up here, right? Get rid of that. Get rid of that. I want to talk to you about what dealers do, okay? Yeah, make sure I get that right. I'm going to do this line, make this line a little bit bigger for you here. Make that yellow. Okay. We have the all-time highs over here. Also note that this is R4 and R5. So for an intraday basis,
55 counterparties take $131.651 billion at the Fed's reverse repo operation.
hold on there. I guess that doesn't matter. It's still hidden in there. This is R4, R5. On the downside over here, let me check this really quick here. I want to show you one quick thing here, okay? I think you run away with it. If you want my take of what we do today, as we approach this, it's 1:20 right now. This is 2:30. I got to do one more, don't I? 2 p.m. There's a couple things I want to talk to you about here. Some important things, okay? When we come to these Fed meetings, oftentimes, even if we're going higher, you will see it's this is 2 p.m. You'll oftentimes see us like up, right, and then could do something like this, then back down. But more importantly, we get into like the 2 o'clock hour right here and the 2:30 hour right here. You'll oftentimes see a failure just before we get to a resistance point, back down, even if we're going higher, and they're going to reprice all of your options. I always like spreads if you're a directional trader, rather than zero dates, as they reprice the market, even if we're going higher. Your PT, what did I do here? What did I miss here? I have PT1 there and PT2 there. This is your PT1 right here. That's your PT2 right there. And there's your all-time high. Do I think you get to all-time highs? No. Do I think you get above PT2 today? Possibly. But even if we do go up there, I think you still see like a failure. Like a failure, right? Maybe drag back down, then back up again, then back up here, right? So they're going to cut you up the entire way. If we get what's perceived as a hawkish Fed, we will blast the fuck on down. all the way down here. All the way down here. Come up here, right? Start failing. Like, oh, everything's awesome. Fed speak comes out, blast straight down. PT3 down here. Target down below 597.11. Now, I want to show you guys something here, okay? What I think is going to happen. I think they're going to start running away with this shit right now. And you're going to see this by Friday. By Friday close, I think you're going to see us up at all-time highs, and if not breaking above 610 by Friday. I think we're out of here. Why do I think that? Let's go back and look and see, okay? Just give me a quick second here if I can. I want to show you. Second here. I hope I have it on here. Right here. Hey, one quick second here. Come on now. Let's see if I can go over here and show you guys this. Okay. So we had a FOMC meeting in 2023, right? And it was on the 12th and 13th. I'm going to show you this real quick. Came down, we blasted up at the end of the day here, and we just ripped. And why? The reason why is because of this bad boy right here, DivX for S&P 500. And we just fucking super ramped the close. They didn't even wait. There wasn't even a wick down. We just like started ramping right around 2 o'clock. So I'm waiting to see that right there. Like this is 2:30 in the afternoon. This is right where we are right now. That's right where we are. So quick rip down and then blast off into the close. And we just ramped and 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 ramped. And guess what this day is right here? In the same time frame, it'll be December 23rd at 9:30 in the morning. Quick rip up, and then bam, slammed it right back down. You want to be buying that. This would be like Christmas, and in our case, it'd be Christmas. The day after Christmas. This would be the day after Christmas here. If I still have this right. In terms, the dates aren't the same, but the actions were. And then they ramped it up into the new year. Okay, so into the new year. So if you think about this in terms of when the FOMC is, when the DivX is, super ramp up into Christmas, basically, right? Monday. That's when that DivX is paid on VU, and then boom, down into Christmas. Come back after the day after Christmas. You come back and super ramp it up into the 28th, whatever the end of this year is. So let's go back and look at the main screen here, the trigger screen. Let's look at where we started the day, right down here, right? So if we can get some kind of like a doom down here, where's 230? Where's that starting point? Right in there. Some kind of doom in there, and then just rocket ship. That's 2:30. There's 2 p.m. Okay, somewhere in here, we can get some kind of like doom and gloom down in here. little bit of doom down in here, right? I don't care. Maybe just squeeze it up a little bit. And down and then up. Be down here looking for a dip to buy. Now, if we get that hawkish Fed talk, right? You get that hawkish Fed talk, it could still be a fake out for you. So you get the doom and gloom over here, and they're faking out. The bears are all buying the fucking doom. The bulls are all, oh my God, they did the hawkish talk, boom, slam it all the way down, and still all the way back up there. So be down here, Johnny, on the spot for a dip to buy, to go long into the 23rd. Okay? Hopefully we can down there and just be like a catcher. Down here waiting. Hope they don't just run away with it. I hope we get some kind of a downward pull. Looks like we got a little bit of that on in the last Fed meeting in last December. So the key point here, though, would be two things. If I was a dealer, I would want you, if you're a buyer, to not believe that we're going higher, and if you're a seller, to believe that we're going to crash on this Fed speak. So everything is the opposite. VOO, 23rd, VOO. VOO is a better I've been going back and looking at SPX, and I think VOO is the one that's the better and VOO is 23rd. So I think it's 23rd. I don't think it's 20. I think it's 23rd. I started checking like Vanguard shit, and I think it's VOO. I think VOO is closer. 23rd. I think what you're going to do is you're going to be all bulled up, and you're going to come into like the day and a half before Christmas and think we're going to squeeze up, and they're just going to fucking unload on you. And all the little fucking Wall Street gremlins are going to finally go on vacation. Guys are working 90 fucking hour weeks. All right, it's 1:30. I'm going to take a quick break. I'm back with you guys in 15 minutes. Be right back with you guys. Oh yeah, we're taking a trade. I'm looking for a dip to buy. Yeah, we're taking a trade. I'm looking for a fucking dip at like 2 o'clock, 2:30, 2 o'clock, 2:30, some doom. Give me some of that fucking doom.
So keep in mind we're now.
That's right, Nicholas. I'm with you.
On the top of the hour, we see the release of the US interest rate decision, where median expectations see a 25 basis point cut to 4.5%. With this particular meeting, we also get the rate statement, of course, as well as the summary of economic projections, which comes with the FOMC's median rate expectations for next year, the next 2 years, 3 years, and the long run as well.
IWM is starting to creep up now. VIX also creeping up. VIX up, spot up. IWM coming into hourly resistance right now. 232.65, a break above. It starts squeezing. Ugh. I don't know how in the hell people don't like peanut brittle. Peanut brittle, baby. It's like I got like a couple little soft spots out there. You got a soft spot for English toffee. Nothing like English toffee. It's like that toffee that's like wrapped in chocolate and nuts and shit. All right, what are we doing here? I got a couple things I got to do in the background. I got to do that, got to do that, got to do that. Yeah, peanut brittle. Dentists love it. Let's see. Fed. We got the Fed. Federal Reserve, right? That. The FOMC press up, baby. What is this?
Policy to help move the economy towards two essential mandates set for the Fed by Congress.
What the fuck is this?
And price stability. This occurs mainly through the FOMC's influence on interest rates and credit conditions, which can significantly impact financial conditions.
The Fed is doing this?
Productivity and even spending and investment decisions by households, communities.
Let's flip over and get some stuff going here.
Three key Fed entities and the unique Federal Reserve System structure established by Congress more than a century ago help promote conditions resulting in a strong, healthy, and sustainable economy. For more information on how the Fed functions, visit federalreserve.gov.
What?
Click on About the Fed.
Okay, we got the Fed. All right, we got the... Yeah, whoa, over there. All right, we got the Fed over here. What are we doing next? Dude, English toffee is the shit. All right, well, where are we at here? Okay, we got this is S&P 500 above my head. Should I write that? Should I just write SPY? I'll write this in so nobody's confused. Okay, there's SPY. Put ES on. Down here, we're going to put on triple screen, I think, the triple screener. So we're going to get rid of, let me save that. Yeah, it's all saved. We'll get rid of that. No, hold on. What are we going to do here? Do we need to save all this? Click that's saved. Okay, we'll get rid of that for now. Get rid of that for now. Get rid of that for now. We're going to do a triple screener. Is SPY gonna start ripping? Triple boner. What do we do here? We do. Let's do a triple boner. Okay, that maybe we should do it the other way. Hold on. We're gonna do this a different way. Hold on here. I got it. We're gonna do this a different way. We're gonna do a single boner down here. We're gonna make this one SPY. SPY. Have all that there? Yeah, that's cool. Cool. We'll do it like this. We'll do it like this. This is much better. All right. Hold on. I'm getting there. We'll do the SPY right here. This is the smaller screen. This one right here, we'll do the triple boner. On the top. What can you see over there? You can see that one. You can see that one. Okay, we're going to make this one QQQs. Oh, you guys want NQ or QQQs? Does it matter? Or IWM? This is Qs. Can I hide this? Sweet. Okay, here's the Qs. QQQ. Okay, we'll do the Qs right here. Hey, we already got the Qs in there. Hey, cues. Here we're gonna do VIX 9-day. Oh yeah, baby. VIX 9-day. Why is VIX 9-day not showing up on on VIX 9-day? Just note that like be watching that we're in support right now on VIX 9-day. I don't know what's going on with VIX here, but pivots, triggers, yeah. Okay, VIX 9-day. Hide. Oh, fuck. Close eye on this. I'll look at this one here in just a minute. Bam.
Disconnected.
Yeah, we're going to launch this right here. 9 minutes.
Or the latter from 3.4% to 2.8%. So Wells Fargo note that the FOMC refrained from cutting the federal funds rate for most of the year, but starting in September, the committee initiated the easing cycle with a 50 basis point cut. The FOMC followed that with a 25 basis point reduction in the Fed funds rate in November, and this coming meeting seems likely to result in another 25 basis point move. Beyond the rate cuts, the Federal Reserve has also reduced the size of its balance sheet by roughly $845 billion over the past 12 months through its quantitative tightening program. Against this backdrop, that Wells Fargo asked, what have US interest rates done? At the very front end, the yield curve, the yields have fallen in line with the decline in the federal funds rate that has occurred. However, further out of the curve, yields have risen this year despite the FOMC's rate cuts. This fact serves as a sharp reminder that policy rate cuts do not necessarily result in lower long-term interest rates. So the Federal Reserve's QT may have played a small role in the higher long-term interest rates, but we suspect other factors are playing a bigger role. Wells Fargo say the prospects of a hard landing for the US economy have declined relative to 1 year ago, and it appears increasingly likely that structural factors such as faster productivity growth and higher public debt are putting upward pressure on the R-star and by extension the longer-term yields. So Wells Fargo now looking ahead to next year. They expect this FOMC meeting to include signals from policymakers that the pace of rate cuts will be slowing going into next year. Wells Fargo predicts 325 basis point cuts from the FOMC next year, and financial markets are priced for a similar outcome. Currently seeing around 2, though, as closer to 2 than 3 at least. So these rate cuts may put some additional downward pressure on short-term rates, similar to what occurred this year, but we do not anticipate a major decline in longer-term interest rates.
Just a note inside the Discord. There is no shutdown. There is no potential I was asked a question as Cap discussed the potential government shutdown. There's no potential government shutdown. There's an omnibus. All your politicians are going home. They're all going to have a great holiday, and they're going to spend all your money. That's what they're going to do. I promise you. I know. We all want it to happen. I think everybody wants it to happen. It's not going to happen. Just a note here. We've got some Bloomberg terminal stuff inside the Discord here. Another key thing to look out for in the summary of economic projections is Fed officials' estimates for what they call the longer run Fed funds rate. This is essentially their estimate for the neutral level of rates where they neither stimulate nor weigh on the economy. Estimates of this have been rising over the past year because the economy has remained strong even amid higher interest rates. Fed officials and economists now think that may mean that the neutral rate is higher. This could be due to several factors, including a higher U.S. debt load which generally pushes up borrowing costs and higher productivity growth. A recent phenomenon whose drivers are still a bit mysterious, but may include AI. In September, the median estimate of the neutral rate stood at 2.9%. Economists expect that to rise to about 3% this month. That compares with an estimate of 2.5% a year ago. This increasing uncertainty about this is obvious in the range of forecasts, which in September spanned from 2.4 to 3.8%, compared with a range of 2.3 to 3% 2 years earlier.
Contains the Fed's median rate expectations.
What could have a major impact in the economy is the Republicans' stated goal of mass deportations of unauthorized residents. To the extent that happens, it would shrink the labor force and likely add to wage and inflation pressures. The easy answer to any question on that for Powell is simply to note that there's nothing currently underway and we'll deal with the backdrop. Hold on a second, let me make sure I get this right here. Let me read this to you again. The easy answer to any question on that for Powell is simply to note that there's nothing currently underway and we'll deal with the backdrop we get as it unfolds. But individual policymakers might well have incorporated some or other expectation in their projections. So we may not be much wiser by the end of today about what either Fed policymakers or the staff may think Trump's immigration and trade policies will do to the outlook for growth and inflation, and indeed for interest rates. As far as fiscal policy goes, the widespread assumption is that most, if not all, of Trump's 2017 tax cuts that expire at the end of 2025 will get renewed. That, though, wouldn't pose a particular change from an economic standpoint. Nice.
Expect the skew to be toward less easing. Finally, the long-run dot will likely continue its upward migration, rising to around 3.1%, which is the median expectation is looking for 3%. So upgrades to neutral should persist as our own estimates remain materially higher. Deutsche Bank also notes that in Powell's press conference, it is likely to emphasize that with policy still restrictive, the committee believed it could modestly dial back the degree of restraint. But with a strong economy, diminished downside risks to the labor market, and evidence that inflation is stickier than anticipated, the Fed will not be in a rush to get to a highly uncertain neutral level. So Deutsche Bank's baseline remains that a skip in early 2025 could turn into an extended pause, with the Fed having limited scope for additional easing next year.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Use Pro for a year's worth of our service for the price of 1 month and save 92%.
Baby, come back, squeeze me up. I think that was your bottom right here. We held the hourly trigger, I think, back in 23 during the Fed meeting. I don't even think we went below the hourly trigger. Super. I think we should have IWM up over here, not even Qs. I think we should have IWM. IWM wants to fucking move. Yeah, they did. They postponed the. There is no government shutdown. You're not even. That isn't even on your plate until like March. I think it's March, like mid to late March. Didn't we sell the 22nd of March last year? I thought we sold the 22nd of March, didn't we? Wasn't that the top of the market? I could be wrong in that, but that's probably the same fucking thing.
Interest rate decision.
Here we go. 1 minute. VIX 9-day rising.
10 seconds.
Ooh,
25 basis points cut, 25 basis point cut to 4.5% as expected. Fed median rates forecast for next year 3.875%, 3.875% higher than forecast 3.625%.
Q hit its bottom target.
2 years 3.375%, 3.375% higher than forecast 3.125%. For the next 3 years, 3.125%, 3.125% as expected. Long run at 3% as expected. So looking to the market reactions here, dollar seeing some strength, S&P seeing some weakness, yield seeing a bit of whipsawing, but strength overall coming through here.
PT1 being tagged on SPY right now at 604.51, tagging as a low at that point of 603.95.
2025. 3 see 1 cuts and 10 see 2 cuts. 3 see 3 cuts and 1 sees 4 cuts. 1 seeing 5 cuts. But again, 19 officials seeing no cuts next year from the Fed. Policymakers see a 4.3% unemployment rate at the end of 2025 from 4.4% in the September projections. They see the end of 2025 PCE inflation at 2.5% from 2.1%, core seen at 2.5% from 2.2%, upward revisions to...
Of course they do.
Fed policymakers see 2.1% GDP growth in 2025 from 2% in September. Longer run growth at 1.8% unchanged, so an upward revision on near-term growth from Fed policymakers as well. So the Fed statement, little change from November meeting, however. Descriptions of the economy growing at a solid pace are identical.
Whoa!
The reverse repo rate by 30 basis points to 4.25% versus the 25 basis point cut made to the Fed funds rate. So the Fed note they're considering
Yield rising.
and timing of additional rate adjustments. The Fed will assess incoming data, evolving outlook, and balance risks. So Fed vote in favor of the cut was 11-1. Cleveland Fed President Hammack dissented, preferring to leave the policy rate unchanged at this meeting. So the FOMC, again, median forecast shows 50 basis points of rate cuts in 2025 to around 3.9%. FOMC median 2025 inflation forecast, again, 2.5% from 2.1%.
So again, I'm going to read this to you one more time here. U.S. interest rate decision, actual 4.5%, forecast 4.5%, previous 4.75%. It's a 25 BPS cut. Median rate forecast long run, actual 3%. Forecast was 3, previous was 2.875. SPY now bouncing off the pivot point. Q's bouncing off 533.56. You should have gotten an alert at home. I told you to set alert on it. 533.56 tagged perfectly. Fed projections imply 50 basis points of cuts in 2025, another 50 basis point of cuts in 2026.
Chance the Fed will hold rates at the January meeting.
Fed policymakers see 4.3% unemployment rate at the end of 2025 versus 4.4 in September projections. Pretty good to be seeing. That's maybe accounting for some of the immigration policy. Fed policymakers see end 2025 PC inflation at 2.5. Wow, man, they look really good. they're versus 2.1 in September. Core seen at 2.5. Fed policymakers see a 2.1 GDP growth. 2.1% GDP growth in 2025 versus 2% September. See longer run growth at 1.8, unchanged from September. From the Fed, and considering the extent and timing of additional rate adjustments, the Fed will assess incoming data, evolving outlook, and balance of risks. Cleveland's Hammack was the only one that dissented in favor of no rate cut. The dot plot is out, by the way. I'll post that for you right now.
So US rate futures price in just 2 rate cuts for next year after the Fed eased by 25 basis points.
U.S. rate futures are pricing in more than 90% chance the Fed will hold rates at the January meeting. Woo! Hawkish, baby. Fed officials' median view of the Fed funds rate at the end of 2024, 4.4%, previous 4.4, same. Median view of the Fed funds rate at the end of 2025, 3.9%. Previous was 3.4. Major change. Fed officials' median view of the Fed funds rate at the end of 2026, 3.4%. Previous 2.9%. Fed futures funds rate now pricing in pricing in just 2 rate cuts in 2025. Q's taking the brunt of that right now, trading below 533.56, trying to trade to 531.37. PT2 on SPY is 601.65. So no change, no hawkish tone from the Fed in their language, but definitely hawkish tone in their outlook for 2025, and the initial reaction from the market is lower. Trading 602.04, 602.09 right now. PT2 coming to play. S2 on SPY. Yield rising right now. We look over here at what's TLT doing over here? TLT selling down right now to 89.90. $89.60 was the prior low. We were hoping that TLT would go even lower than this. SPY now trading 609.90. Yields ripping right now. Q's trading 531.37. Ooh, yeah, there's a little gap down there, too. If SPY loses, 531.37, target 525.46, 531.08 would be a bloodbath below from here. Q's testing 531.37, 531.08, pounding on support. Daily trigger on SPY for the weekly low would be a bloodbath down here. I got PT3 down at 597.11. Here's the weekly low right here. Let me show you that. Let me just switch over to this really quick. This PT2 breaks, and it's a straight bloodbath down to 599.16, and more importantly, probably slice right through it down here. Trade 597.07. Q's holding on to 531.37, 531.08 right now. Here's your Q. This is your SPY right here. But watch up here. Here's the Q's. Watch Q's here for a fucking bloodbath if it breaks. Straight down right there. Watch right there in that corner right there. To 10 p.m. SPY has broken through both local support and the gamma flip at this point. There's a gap down below on SPX at 599, 8.64. Put wall is at 5975 on SPX. Right hand side. Here's SPY gamma, broke through the flip like it was nobody's business, right through it like butter. Also note that the put wall all the way down here at 5997.89 and the daily trigger possibly holding up support here at 6,000. Yield still climbing right now. Q's holding on. VIX 9-day not making a move right now. All within range. SPY climbing its way back right now. Q's holding on to 531.37. Woo! 60 part. What would that be? Woo! 6 points down on Q's would be, this would bloodbath a lot of bulls. A lot of bulls. You blast this down right here. Oh, baby. SPY fighting for itself to get back above 601. Currently trading S3 on an intraday basis on SPY. 10-year yield still cranking right now. Watch out for a quick trip down to this put wall down here. Just keep your eye on this 5974 if you're looking for a turnaround. I'll go back down here and show you guys this. Watch out for this nice slice down, then a turn up right here. So if you're looking to get long, right in here, these are some places of interest on SPX. You should see that same target right down here. 599, 598.50. Oh, sorry about that. Hold on here. Getting all wonked out trying to get my screeners right here. Yield's still cranking right now, 4.453. VIX 9 days starting to run to the upside. Qs would totally bloodbath down to 525.46. Did IWMs crash yet or no? Well, look at IWM now. Did we get the low in IWM? Oh, yeah, baby. IWM sitting on 228.67. Got a little bit more down to go. We've got 227.76. Oh, look at that step. Check out IWM down here. Sitting on trend going back all the way back to October 31st. There's another target lower at 222.64 on IWM.
Last up around 6.9 basis points at 4.454%.
Ooh, someone was inputs earlier, right? You would have made bank. IWM trading 228.53. $12 minutes until the presser. IWM slamming down out on trend going all the way back to late October. Q's beginning to lose support on 530.61. Trying to hold on to its pants and shorts right now. Four officials penciled in 25 BPS or less of cuts for 2025. That's actually good. So even this negative reaction is not as negative as you think it is. You guys, a lot of you guys think in like terms of a 1 minute chart or 1 day. This is actually setting up a bull run for 2025. You've got four officials penciling in 25 BPS or less. You've got a majority saying, man, maybe we'll have 2 cuts next year. And their outlook for next year is pretty good. So there's an idea here that we're going to have a good 2025. I know that it's not double speak, but some of the speak that you hear from the Fed, their projections for next year are very good. They have very good outlooks for next year across the board. So even reading this just now, four officials penciled in 25 BPS or less for cuts for 2025. If you're going to get all cuts in 2025, first half of 2025, they only chase cuts when the market is crashing. This is the only time you get aggressive cutting. So these Fed officials are looking good for, or they're at least saying, yeah, we're looking up for next year. Let's go in the bubble. Q's trying to recover right now. SPY trying to recover right now.
Voice news disconnected.
Why does this keep disconnecting me? I keep getting disconnected on this. I don't know quite why I keep getting disconnected on this. I gotta reconnect. I think it's maybe like it's gotta be like a thing from Edge or something. Let's see this here. Close that out. Close that out. Close that out. Close that out. Oh, what is that right there? I keep getting kicked off of Microsoft Edge in the background. Yield still on the spike. SPY turning to the upside right now. Q is trading 532.26. VIX still on the rise. One minute trigger turning up right now. Coming into the Fed presser. 8 minutes left. Hold on, I'm in the middle of something. Come on now, baby, turn up. Turn up. Hold on to your panties, Qs. VIX 9-day beginning to make a new high right now, trading 1384. Presser starts in 6 minutes. SPX fighting its way back to the gamma flip now. Want to pay very close attention for a rejection above at 6030. I have it up on the chart right here for you. You do not want to see this local support turn into local resistance as well. So you don't want to see any kind of rejection here. You want to see any kind of rejection there. Still a gap down below an SPX that hasn't been filled at 6,000 either.
It's been 5 minutes time now at the bottom of the hour. Get the FOMC press conference with the Chair Powell. Live video to watch this is on the feed for those interested.
Five minutes left until the presser. 10-year yield chilling out a little bit here. VIX 9-day now breaking out, trading 14.08. Still haven't traded the put wall at 5.975. SPY trying to break above PT2. Three minutes left. I'm sure here that tech bulls are watching this very closely. 531 has to hold. If not, bloodbath down to 525.46 on Qs. Watch this screen right here. Yield beginning to cool off. VIX 9-day rising. Two minutes left. Why can't I get this thing to do the playback speed? There we go.
So we're shortly expecting the start of the FOMC press conference with Chair Powell. Again, the live video to watch this is on the feed for those interested.
Well, they want that sweep so bad. They've been wanting this. They've been wanting this. They wanted the sweep earlier on SPY. Didn't get it. They want the sweep now on SPY. Q's looking for the sweep now, trading 530.68. SPY trading 600. SPX trying to close the gap down below at 6,000. Put wall at 5978.71. VIX rising, still trading 14.13. Presser starting right now. Oh, we'll cut darker purple.
Fed's Powell begins the press conference.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Fed's Powell says we're squarely focused on two goals.
And has made significant progress toward our
economy is strong
goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has moved much closer
to our 2%
says the labor market remains solid. Goal.
And inflation much closer to the 2% goal.
Economy's strength by supporting maximum employment and returning inflation to our 2% goal. To that end, today, the Federal Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a quarter percentage point.
Powell says the labor market has cooled from an overheated
we also decided
state
to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient.
Fed's Powell says economic activity has expanded at a solid pace.
Voice news disconnected.
Consumer spending is resilient. Investments in equipment has strengthened.
Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years.
SPY squeezing right now.
In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 173,000 per month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains
bullish
relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices.
They've got the one spike in inflation in 25.
See the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market, while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated,
Same talk.
policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Oh, here we go.
Gina Smilik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals: maximum employment and price stability. We see the risks as two-sided: moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why.
That looks like a planted question.
Do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level, that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. But 12-month inflation has actually been moving sideways as we are lapping the very low readings of...
Who's got this camera?
Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress, slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments.
Ooh.
You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track.
We're gonna run it hot, baby.
I think the actual cuts that we make next year will not.
We're gonna run it hot.
Anything we wrote down today, we're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
Doom.
To cut further after this point, I would say it this way: we've reduced our policy rate now by 100 basis points.
Only doom.
Closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of down 2 cuts next year compared to 4 in September.
Howard Schneider with Reuters, and thanks for the opportunity to ask you a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
Well, what's inflationary fiscal policy? Spending money?
And let me start by saying that we think the economy...
Printing free money?
Policies in
Print to go burr?
Remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024 so far than we had expected, and is expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher.
He's telling himself, "Don't say Trump. Don't say Trump."
In the case of some people, the way I would say it is this: some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down
hot potato
around inflation. And the point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that
Jesus Christ.
Some of the people, but as I said, there's a range of approaches on the committee.
I could follow up on that. You mentioned the risk.
Do you see this?
The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary...
Oh, man, he's like fucking...
The risk weighting has jumped to the upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation in September and October. As I mentioned, November is back on track. But once again, we've had a year-end projection for inflation, and it's kind of fallen apart.
You almost said it too.
That is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still going to be between 2.5 and 3. It's way below where it was, but we really want to see progress on inflation. As I mentioned, as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways on 12-month inflation as the
which is good.
Moves. That's in part because inflation was very.
Q's making its way down to 5.25.
Nonetheless, as we go forward, we're going to.
Here comes the pain for the bulls.
On bringing inflation down and keeping a solid labor market.
Chris.
Thank you, Chris Rugaber at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the Teal Book discussed a policy of looking through any new tariffs as long as there were one-time increases and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal Book alternative simulations are a good place to start. I happen to have brought them here with me today.
I happen to have brought them with me here today.
They're a good starting point, and I would just say, it's 6 years old analysis, but nonetheless, this is still, I think, the right questions to ask. And there were two simulations. One was seeing through, one was not. And I'd point you. There's some language in the see-through paragraph that says, that considers situations in which it might be appropriate to see through inflation, and then names some conditions that in which it might not be. In any case, this is not a question that's in front of us right now. We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding, again, the ways in which tariff-driven inflation can affect, tariffs can affect inflation in the economy, and how to think about that. So we've done a good bit of work, all of us have, each of us has, and it puts us in position when we finally do see what the actual policies are to make a more careful, thoughtful assessment of what might be the appropriate policy response.
Great. And just a quick follow. Given the recent bout of inflation that we've been through, with consumers seeing how prices can rise and businesses seeing that they can raise prices at least for some time,
Greedflation.
It a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen in the past few years?
So the main thing is, and this is also a point in these alternative simulations, is there are just many factors that go into what
SPX coming down into the put wall at 59.75.
Consumer inflation. How persistent will that be? And so we just
Q's trading down to 527.95, looking to trade 525.46.
try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection for 25 so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers.
We got a lot to talk about because they didn't say shit in the press release, but they totally fucking said it in their projections for next year.
Core inflation coming down to 2.5 next year. That'd be significant progress. You see a slower path. I think that does take on board that we want to see real progress, but we'd be seeing meaningful progress.
That's rate hikes next year.
Down to that level. That wouldn't be all the way to 2%, but that would be better than this year. This year will be 2.8 or 2.9. That would be meaningful. We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still out there very gradually cooling so far in an orderly, gradual way. but it's also something we need to keep our eye on.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extent and timing language in the statement, which has been used at times in the past when the committee thinks maybe it's going to be on hold for a while, and they said, gee, this looks like it could be the last rate cut for some time, would they be mistaken to infer that?
So that's not any decision that we made at all. Let me explain extent and timing. So the sense of that
Timrose wants to hear rate hikes right now.
About as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly, that distance has shrunk by 100 basis points. So it's significantly smaller. So that's the extent question. And we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests, again, that we're at a place where we assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions about the longer run. We're trying to make sensible policy as we go. And I just would emphasize the uncertainty, which is it's just a function of the fact that we expect significant policy changes. There's nothing really unusual about that. I think we need to see what they are and see what the effects they will have. We'll have a much clearer picture, I think, when that happens.
Mike.
Michael McKee from Bloomberg Radio and Television. Even though you've cut rates by 100 basis points this year, we haven't seen much change in mortgages, auto loan rates, or credit card rates. You say you're significantly restrictive. Are you running a risk that the markets are fighting against you and the economy could be more at risk of a slowdown than you anticipate?
So the rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do. So we look at that, but we look at all financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is, most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%. Second and third quarters were right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group. And there's no reason to think a downturn is any more likely than it usually is. So the outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policy so that we can get inflation down to 2%. We're also going to be looking out for the labor market. We want to keep the labor market pretty close to where it is. We're pretty close to estimates of the natural rate of unemployment. Job creation is a little below the level that would keep it there, but nonetheless close. And so that's what our policy is trying to achieve.
If I could follow up by asking about your formulation for beginning rate cuts, included the phrase, we need to have confidence that inflation is moving down towards our target. Given the fact that you've raised your forecast for next year, do you have confidence, or are you uncertain about the path of inflation going forward?
So confidence was our test for raising rates, and we made, look at the broader sweep. We've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that we have been for headline inflation. So I would say I'm confident that inflation has come down a great deal, and I'm confident in the story about why it's come down and why that portends well. And I'll tell you why. Again, you do see with housing services inflation, which is one that we've really worried about, it really has come down now quite steadily at a slower pace than we thought 2 years ago, but it's nonetheless steadily coming down as market rents,
It's almost like some of these guys want to see us like ramping cuts.
New leases that turn over, not new tenants, but
they just want to see the fucking world burn.
So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another big piece of it, has returned right to the range where it was before the pandemic.
SPX coming into 5975 right now. Watch out for a squeeze.
We think overall that should generally
almost there.
That leaves non-housing services, and market-based non-housing services are in good shape. It's non-market services, and those are services that are imputed rather than measured directly, and they don't. We think they don't really tell us much about the about tightness in the economy. They don't really reflect that.
SPY smashing into 59711.
Off of asset prices, and that just
SPX blasting through the put wall at 5974.
Inflation should be coming down. Is still intact. In particular, the labor market.
Qs have still not hit 52546.
Cooler than it was in 2019, a year when inflation was well under 2%. So it's not a source of inflationary pressures.
583.
Particular professions where labor is tight. But overall, you're not getting inflation.
And 59548 for SPOOs.
The story is still just we're unwinding from these large shocks that the economy got in 2021 and 22 in, for example, housing services, and now also in insurance in particular, where costs went up, and those are now being reflected later in housing insurance. It's real inflation, but it doesn't portend persistently high inflation. So we and most other forecasters still feel that we're on track to get down to 2%. It might take another year or two from here, but I'm confident that that's the path we're on, and our policy will do everything it can to assure that that is the case.
Colby. Thank you. Colby Smith with the Financial Times. So the unemployment rate as of November, while still very low, is within spitting distance of the level that generated a lot of concern about the labor market over the summer in the lead up to the 50 basis point cut in September. Hiring has also narrowed to just a handful of sectors. But now the committee appears comfortable skipping cuts at upcoming meetings. So what has changed about the committee's assessment of the risks confronting the labor market? Is there just less concern now on that front, or is it just about there being more upside risk to inflation that now needs to be accounted for?
The unemployment rate is now the same as it was in July, 4.2%. It's moved up and down, but it's now the same as July. And job creation is lower than it has been, but it's been steady. It's not declining. It's steady at a level which, as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant, but it's not so far below. So you might if we have the break-even level right, and if job creation continues at that level in the establishment survey, then you would get a tenth maybe every other month kind of thing. So gradually declining. We don't have that kind of precision in this. So you're right, though, and I read out some of the reasons. We do think the labor market is still cooling by many measures, and we're watching that closely. It's not cooling in a quick or in a way that really raises concerns. I think you pointed out participants in the FOMC really thought that the risks and uncertainty had improved relative to the labor market, and it's because things have just gotten a little bit better. It doesn't, the unemployment rate flat and things like that. Nonetheless, we're watching it closely.
If the idea, though, is that no additional kind of softening in the labor market is welcome here, what's to prevent that from happening if rates are still restrictive?
So what I said is we don't think we need further softening to get to 2% inflation. That's what I'm saying. Not that it's not welcome. We don't need it, we don't think. If you had a situation where inflation's moving around by a tenth every few months, that's, we'd have to weigh that against the fact that inflation has in recent months been moving sideways in the 12-month window. And so we've got to weigh them both. And at this point, for a while there, we were only really focused, mainly focused on inflation. We've now gotten to a place where the risks to the two are we think are roughly in balance.
This is very bullish, by the way.
That's how we think about it.
Well, not very bullish, but the eye of the needle trade, the mid-90s trade.
the word recalibration today. And I'm just wondering if the recalibration phase is over and what you might call this new phase and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase yet, but we may get around to that. But no, I would say we are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation. And that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
I wonder if I could follow up and ask you how much you or the committee are looking through some of the high numbers we've had in the recent inflation numbers. For example, cars being up maybe because of the hurricanes, eggs because of the avian flu, that kind of stuff, and then looking forward perhaps to housing inflation coming down as it did in the recent report.
So we always try to be careful about not throwing out the numbers we don't like. It's just an occupational hazard is to look, those high months are wrong. What about the low months? We have a very low month potentially in November. It's estimated by many to be in the mid-teens for core PCE. So that could be idiosyncratically low. We try to look at not just a couple or 3 months. We shouldn't have our position shouldn't change based on 2 or 3 months of good or bad data. We have a long string now of inflation coming down gradually over time. As I mentioned, 12-month, I think it's 12-month headlines 2.5, 12-month core is 2.8. That's way better than we were. We still have some work to do, though, is how we're looking at it, and we need policy to remain restrictive to get that work done, we think.
Neil.
Thanks, Chair. Thank you, Chair Powell. Neil Irwin from Axios. Financial markets have been very buoyant really all year. Is the committee comfortable with where financial conditions are, or do you see a risk that looseness in financial conditions could undermine progress on your inflation target?
So we do look carefully at financial conditions, of course. That's part of what we do. But we really look carefully at is the performance of our goal variables and how are we affecting the economy. So what we've seen over the course of just take the last year. We've seen inflation, over the last couple of years, come down a lot. We've seen the labor market cool off quite a bit. That suggests that our policy is restrictive. We can also look more directly at the parts of the economy that are affected by that are interest sensitive, like particularly housing. Housing activity is very low, and that's partly significantly because of our policy. So we think our policy is working, it's transmitting, and it's having the effects on our goal variables that we would want.
Q's getting annihilated right now, trading below 525.46. Next target, 519.28, 517.97.
Variables and the where we'd expect to see it.
So if I may, speaking of assets that have been buoyant, do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
We're not allowed.
Q's down 2.21% right now, getting hammered.
Looking for a law change. That's the kind of thing for Congress to consider, but we are not looking for a law change at the Fed.
Andrew.
Hey, happy holidays, Mr. Chairman. Thanks for taking our questions. I was wondering if you are satisfied with the way 2024 is ending, if you're confident that we've avoided the recession that forecasters were predicting as inevitable a couple years ago.
I think it's pretty clear we've avoided a recession. I think growth this year has been solid. It really has. PDFP, private domestic final purchases, which we think is the best indicator of private demand, is looking to come in around 3% this year. This is a really good number. Again, the U.S. economy has just been remarkable, and it's when in these international meetings that I attend, this has been the story, is that how well the U.S. is doing. And if you look around the world, there's just a lot of slow growth and continuous struggle with inflation. I feel very good about where the economy is and the performance of the economy, and we want to keep that going.
The other thing I just wanted to ask about was the you guys have noted that the unemployment rate is still low. However, employment rates have fallen rather quickly. The prime age employment rate has fell by about half a percent rather recently. The question, I guess, is do you think there's maybe more downside momentum in the labor market than the unemployment rate alone is signaling?
I don't think so, no. I think overall, if you look at it, prime age participation is still very high. What's going on in the labor market is that the hiring rate is low. So if you have a job, you're doing very well, and layoffs are very low, right? So people are not losing their jobs in large numbers, unusually large numbers. If you are looking for a job, though, the hiring rate is low, and that's a signal of lower demand. It has come down. So we look for signs like that, and that's clearly a sign of softening, further softening. I didn't mention it earlier, but I think you can see an ongoing gradual softening in the labor market. Again, not something we need to see to get 2% inflation, and that's part of the reason that explains why we moved ahead today with the action with an additional cut. So, but you take a step back, the level of unemployment is very low. Again, participation is high, wages are at a healthy and ever more sustainable level, wage growth, and so the labor market, this is a good labor market, and we want to keep it that way.
Thanks.
Amara. Thank you, Amara Mokway from Bloomberg News. I just want to put a finer point on the labor market. Can you keep the labor market this way, in the strong position that you have described, without further cuts? In other words, do you still view the labor market as needing support to protect against a further cooling?
We can't know that with any tremendous certainty. I will say that we think that our policy balances the risks. We think the risks are roughly in balance as between the two mandates, and we think the labor market is in solid shape. And when I say it's softening or cooling, it's a very gradual process.
The VIX 9-day trading 15.95 right now. Q's trying to hold on 525.46.
Still a bit above what would be
10-year trading 4.493. 5 is about where you want to see at most. 4.5 to 5. 4.5 to 5 is, I think above that, ooh, baby.
So, I don't want to overstate the downside in the labor market, because the downsides clearly appear to have diminished. Nonetheless, it's one of our mandate goals, and we pay close attention to it, and it's worth noting that it is still gradually cooling, gradually and in an orderly way. And that's how I would characterize it, and that's why we're paying careful attention.
Elizabeth.
Thanks so much, Chair Powell. Elizabeth Schulze from ABC News. As you've noted, the Fed is now forecasting higher inflation next year. High prices are still a burden for so many households right now. Why do you think it is that inflation is proving to be more stubborn than you'd expected?
It breaks down into a long answer if you want, but it just has been a little bit more stubborn. I think if you go back 2 or 3 years, many people were saying that to get this far down, we would have had to have had a deep recession and high unemployment by now. Well, that has not been the case. So, the path down has actually been much better than many predicted. We've managed to have the unemployment rate remain essentially at its longer run natural rate, while inflation has come down from, core PCE inflation has come down from 5.6% to 2.8% on a 12-month basis. So that's a pretty good outcome. Why hasn't it come down? One reason is that just a technical issue around the way we calculate housing services, and that process has been slower than market rents are showing up more slowly in that measure than we might have thought 2 years ago. So that's part of it. I think there are other parts of the story, but what I think people are feeling right now is the effect of high prices, not high inflation. So we understand very well that prices went up by a great deal, and people really feel that, and it's prices of food and transportation and heating your home and things like that. So there's tremendous pain in that burst of inflation that was very global. This was everywhere in all the advanced economies at the same time. So now we have inflation itself is way down, but people are still feeling high prices, and that is really what people are feeling. The best we can do for them, and that's who we work for, is to get inflation back down to its target and keep it there, so that people are earning, big.
Dude, get me a fucking fill.
Their wages are going up. Their compensation is going up faster than inflation year upon year upon year, and that's what will restore people's good feeling about the economy. That's what it will take, and that's what we're aiming for.
And as we look ahead to next year, what do you see as the biggest challenge to the economy under the next administration?
I feel very good about where the economy is. Honestly, I'm very optimistic about the economy, and we're in a really good place. Our policy's in a really good place. I expect another good year next year.
Edward.
Thanks, Chair Powell, for doing the questions. Edward Lawrence from Fox Business. So you say that we're closer to the neutral rate. What % do you see and the committee believes, where is that neutral rate?
So I'll say a couple things. First of all, when we write, the thing we write down in the summary of economic projections is the longer run neutral rate, which is the neutral rate at a time when supply and demand are in balance, the full economy is in balance, and no shocks are hitting the economy. That is not where we are right now. So when we're making monetary policy at the Fed, that's not the question we're asking. So you can't do a straight read between those longer run numbers that we write down and what we think the appropriate policy should be. So basically, at any given time, various shocks are hitting the economy. And so what we're doing in real time is we're looking at our policy stance, and we're looking at the way it's hitting the economy. And particularly, we look at the effects it's having as we try to move the economy toward maximum employment and price stability. And the answer can be, there are things that affect the economy that are lasting but not permanent. And the ones that are permanent are the ones that would be in our star. The ones that could be lasting but nonetheless go away over time, they could actually affect what's sort of technically the appropriate neutral stance in near term. So we're looking at that, and we don't know exactly where it is, but as I like to say, we know it by its works. And I think what we know for sure is that we're 100 basis points closer to it right now. There are many estimates of where that might be, and we know we're a lot closer to it, and I think we're in a good place, but I think from here, it's a new phase, and we're going to be, cautious about further cuts.
But I think that the markets are looking for a little more clarity. I mean, I've heard estimates from 2.9% to 4%. I think the markets would like to see a little more clarity about a year out, 18 months out, as to where that goalpost, for lack of a better term, is, because at the moment it looks big.
Yeah, I mean, honestly, there are countless models of what a neutral rate might be at any given time. There are empirical models, there are theoretical models, there are things that combine them, and they have as many different answers as you'd like. So there is no real certainty. And I mean, it's actually a good thing to know that we don't know exactly where it is. So you're not tempted to think, oh, I think this model or this estimate is right. You just have to be open to the empirical data that are coming in, and also how it's affecting the outlook. And it's not made any easier by the fact that that our policy works with long and variable lags. Nonetheless, that is the job we have, and so I think it's appropriate for us now to proceed cautiously, now that we're 100 basis points closer to neutral, and we'll do so. Meanwhile, the economy seems to be in good shape, and these cuts will certainly help to support economic activity and the labor market, while we can still make progress on inflation, because policy is still meaningfully restrictive.
Victoria. Hi, Victoria Guida with Politico. I just wanted to make sure I understood what you were saying at the beginning about inflation. Are you saying that progress on core PCE counts as progress on inflation, even if headline inflation ticks up? And then also, since that's what's projected in the SEP, I was wondering what accounts for that? Why do you all see core PCE going down and potentially headline inflation ticking up?
So, and as I imagine the the goal overall is headline inflation because that's what people experience. People don't experience core inflation, they experience inflation, and that includes food and energy costs. So that's the overall goal. But as we know, headline inflation contains energy and food, and those prices can fluctuate for reasons that are not related to tightness in the economy and therefore are not really good predictors of future inflation. So it turns out that core inflation is a better predictor of overall inflation than overall inflation is. So we look at core inflation because it's a better measure of what future inflation is likely to be because it's a better measure of what inflation pressures exist. So it's complicated, but ultimately our goal is headline, not core. So your second question was what?
Why do you all see core going down but headline potentially ticking up?
So headline can be affected. You're talking about next year.
Mm-hmm.
Yeah, so headline it can be affected by energy prices and food prices. So that there will be things in the headline forecast that are to do with forecasts of energy.
VIX 9-day trading 1724 right now.
Core going out a full year, then it'll be much more driven by things like tightness in the economy. That's why the two can go in different.
Q's wiping out bulls 523.71 right now.
That's because energy prices have been coming down, which is a great thing for people, but energy prices will come down and then they will go up, and it won't really be telling us anything about how tight the economy is and how future inflation will perform.
Do geopolitical risks factor in at all to how you're thinking about energy prices?
We monitor geopolitical risks really quickly, but really carefully rather. But I would say so far those risks haven't really. Nothing has come out of those risks that has really been important for the United States economy. The single thing that you would look to is the price of oil, given that we're talking about the Middle East and Ukraine, but that is a good summary statistic for the kind of thing that could go wrong with global turmoil. But the price of oil has been coming down, and because of supply conditions, global supply conditions. So the U.S. is not feeling really the effects of geopolitical turmoil. But we are certainly at a time of elevated geopolitical turmoil, and it remains a risk.
Kelly. Thanks, Chair Powell. Kelly O'Grady from CBS News.
3:18 in the afternoon.
Said a minute ago that wage growth is outpacing inflation now. It wasn't the case for some time, of course. It's partly.
Keep your eyes on Q's. Can you guys see this? Yeah, you guys can see this. Q's over here still has more down to go. Q's at 523.54. Could trade as low as 519.28, 517.97.
Higher readings or a couple months of lower readings, and what we had was September. We had
SPY is just tagged S3 on a weekly basis. 2 sigma move, trading 594.17.
Public is experiencing that as a surprising upside risk to inflation. I think inflation is much lower. What the public is feeling, and they're right about it, is that prices are just, the price level went up because of the past inflation. And it's going to take some time for real wages to recover over a period of years in which your real compensation is growing. And in other words, your compensation is growing meaningfully faster than inflation. That's exactly the kind of economy we have now. And we just want to hold on to it. That process will probably take some years, but that's what's going on right now. And I don't think that a couple of months of higher inflation really signal that anything of the nature you're suggesting.
And just one follow-up. Let's look more long-term. You previously predicted hitting the 2% inflation target in 2026. It's now been pushed out to 2027. You said you're focused on enabling further progress on inflation. That's not necessarily progress in the right direction. Are you confident that target isn't going to move further out?
We're talking about when you're projecting the economy, 3 years out, 2 years out, you're talking about high uncertainty. Very high uncertainty. We really, at that point, it's not possible to confidently predict where the economy is going to be in 3 years. So what we're doing is we're looking at what's happening now. And we're kind of projecting that the same kinds of things are happening. So we keep a strong labor market. Housing services inflation comes down. Goods and services.
Jesus Christ, you could see me buy calls on fucking Unusual Whales bot.
Market services return to their prior level. All of those things should happen over time, and those pieces come together. There's every reason to think that they will. The timing of it is highly uncertain.
Oh my God!
You're not wrong though. That it's been a bit frustrating because
who's that right there?
It has been slower than we had hoped. Nonetheless, we're still on track. Two years ago, you'd said we were.
Oh my God! Am I the only motherfucker in the market right now?
Would say I'll take that. Pretty good interim place to be. Job's not done, but I think we're feeling good about where we are.
Hold on here.
Go to Nancy for the last question. Hi. From Marketplace.
I got to be the only motherfucker buying call spreads down here.
Sideways. Appears to be settling in around
Jesus Christ.
0.5%.
Just a heads up here.
Just going to have to settle for that. And
I was trying to open some 600s, 595s, no fill, garbage payout on it too. Just got a fill on 595, 600.
Every intention and expectations that
for 1223.
Sustainably to 2%. That is, and I am confident we will achieve that. It has taken longer, but you have to be. We are making progress. We have made a great.
Jesus Christ! Like 5 fucking people trading SPY right now.
Inflation. That's what we owe the public, and we're committed to achieving it.
In that case,
come on, baby.
A rate hike next year.
You don't rule things completely in or out in this.
Fucking Christ.
That doesn't appear to be a likely outcome. I think we're at 4.3%. That's meaningfully restrictive, and I think it's a well-calibrated rate for us to continue to make progress on inflation while keeping a strong labor market. So, thank you very much.
All right, so there's the Fed. Jerome Powell there is finishing up. So this is definitely unusual, right? We talked about this outcome earlier this morning and afternoon. But we spoke about it a little bit differently, right? We said you might see a language change. They didn't put the language inside of the. They didn't put the language inside of the press release. They put the language inside of the dot plot. They put the language everywhere else but inside of the presser. Now, or not the presser, excuse me, the press release. Now, Jerome had fucking questions. Hold on a second here. Let me switch back to the hold on here. Main screen. There we go. Uh-oh. I didn't know my hold on one second here. Let me mute all this, and I got some stuff to do here. I didn't know my camera wasn't on. I got so many fucking screens that I'm looking at, it's not even funny. Hold on one quick second here. This is all new to me. Hold on one second here. A bunch of this stuff right now is all new to me. So, this is kind of a big day, right? We got nothing in the press release. You could tell for sure that there were questions planted in that audience right from the get-go. That's number 2. And there were even leading questions, which was like, you remember I was supposed to ask this question, right? And Jerome's like, oh, yeah, you're right. I just happen to have that with me here today. There was like 2 or 3 questions that were leading. So they're planted, of course. So there's a few things to take away from this. Number 1. Hold on a second here. Let's go back. Hold on a second. Hold on. I got some stuff I got to do here. All right, let's put the SPY back up here. Woo! Buried. PT1, PT2, PT3. Do we go any lower? The next weekly is at 583. Yowza. So the big takeaway from today, though, is this. We said this earlier before the presser today, or the FOMC statement today, which is that you get the hawkish cut, the hawktois, right? You get the hawkish cut from the Fed. And we did, didn't we? We didn't get it in the written, So I am interested for sure in whatever is said by in the minutes. The minutes are going to be fascinating to read. And then almost immediately, Jerome Powell is unwilling to mention Trump by name. He danced around it a lot earlier in the presser, and I thought that was kind of fascinating. But there was definite language change in the press conference that was not in the press release today. Well, it was in the press release, but not written in the press release words. Now, we got to talk about this because, in all honesty, I kid you not, like, I think my calls like showed up on fucking Unusual Whales. So the key point about today is that you got to remember here, right? If the Fed is cutting, we're going to keep this simple. If the Fed is cutting and cutting aggressively, you know the only time that they do that. It's when they have over tightened. That is key. Don't let anyone else out to tell you anything other than that. Fed does not aggressively cut rates as the market is, I don't know, about to take off to the moon into the upside. So you kind of, even though we're down today, you don't want to look at this as, oh my God, we're going to have a crash and we're going into a recession and a depression. Next week, the tires burning in New York City and any of that kind of stuff. You shouldn't be looking at this presser today or this press release as something negative on the marketplace. If anything, it is a sign of bullishness, at least I don't know if it's passive, but we're waiting to see what's going to happen in Q1, Q2 of 2025. And some of the projections they had like projections of inflation coming down that would imply more hikes. And then he had a good unemployment rate. That's implying that we're going to have jobs available, right, that are going to need to be filled, which also brings in the whole wage spiral going up, right, paying people more to be in these jobs. So it brings up that whole other idea that, no, your eggs aren't going down to $2 a dozen, but your pay should go up. Now, we don't know if that's going to happen, right? We don't know if we're going to get higher wages to combat higher prices. We don't know what Trump's real policy is going to be, what's implemented, what's not, the effects on the economy. And this is like the fascinating part of this is there was an implication, or Wall Street said if Harris won, we'd probably see a recession sooner. Their other argument was that we wouldn't see that recession sooner, but later be pushed off by Trump by spending. And of course, inflationary policies and this whole like tariff thing, tariff arguments, and then of course, immigration arguments. And someone did bring up in that presser about the kind of inflation that it is. Is it bad? Is it good? So I found that fascinating as well. So will they be chasing cuts in 25? More, their outlook, is it real? I don't think so. I don't think so at all. Do I think that they'll be chasing cuts in 25? More than likely at some point late year, they'll be doing that, or even possibly early year. But for right now, I want to show you guys something that's important. So I'm going to set this up for you right now, which is I want to show you the 90s. And I want to show you the Fed's rate path in the mid 1990s, and what this opens up for 2025, which is volatility in a possible bubble. And even if you think like, oh, this is doom and gloomish, if you're a bull, it isn't. It's on a knee-jerk reaction one day is not the market. So I want you to realize that right now that your market's not dead. I would be more scared as a bull if he was to say, oh, we're going to cut today, we're going to cut next month, we're going to cut the next month after that, and we're going to get down to 0% as soon as possible. He says something like that, I would expect a squeeze to the moon for liquidity to start selling the fuck out of this market. We have many examples of that in history of doing that. So if you're a bull, you're probably safe-ish for now until we find out what Trump's actual policies are going to be, what the Congress's policies are going to be. What takes effect? When does it take effect? And when does it actually impact our economy and our stock market? So let's take a quick peek here. I'm going to leave this up here. Well, we don't have a lot of time left today. It's 3:30. We have half an hour left. I'm going to move these over. It's 3:30 right now. I'm going to try to fucking blood us down to this goddamn close. Hold on 1 second here. It's 1600 right here. Keep this one up right here. Woo! And I'm going to show you that right there. Look at that weekly down there. Nasty little fucker down there. That would fucking destroy me. 590, 585. I'd be fucked right here for next week. So, but I gotta show you guys. I'm gonna set this up on the bottom side of your screener down here. Just give me like 2 seconds here to bring this up for you and kind of try to explain this to you. Was it bullish? Was it bearish today? And the outlook for the future. So give me just 1 quick second here. See if I can do this. SPX. Fed fund rate. Look at that Fed fund rate come down. Whoo-ee. 1 quick second here. I'm gonna go down here right now. Bottom right. We'll do it together. Sorry that it looks so sloppy at the moment. We're on a daily basis on SPX. We've got the Fed funds rate right here. And then just underneath it is the unemployment rate. The unemployment rate right here. And this is some of what they're talking about today is that the unemployment rate is on the rise. And the Fed's saying that it should come down in 2025 on their SEPs, right? Now, they're saying that there's like a wink and a nod, not saying Trump or removing immigrants or illegal immigrants from the country would provide more jobs for us. It has been sideways. There is no velocity in the unemployment rate right now. See, I said that it's come down. No new high in unemployment. This is what the expectation would be right here. And we've also have the unemployment or the rate of inflation underneath in green. See this line right here, which has not become or does not have velocity at this point. But he did talk about the possibility of that velocity to the upside. At this moment, no. And so he's saying, maybe we leave rates where they are to do its job to send inflation lower. We don't know what Trump's policies or actual policies are going to be. And we're even open to raising rates. And that would mean that if inflation got out of control, they'd come in, maybe raise 0.25, try to dump inflation down. And the concept here is, let me get here for a minute. The concept here is that for the market to stay strong, you want to see the unemployment rate and the inflation rate stay kind of like this. Okay? Something just like that. Or sorry about that. Hold on. Something just like that. You don't even want to see inflation bounce off 2%. That typically leads into a recession as well. And you don't want to see unemployment begin to ramp above 4.5% to 6.5%. That could also cause us. And these usually line up. You usually see 2%, and then you'll see the unemployment rate ramping at the same time. Now, I want to show you something important here, too. Watch this curve here on the Fed funds rate. And I want to take you back to 1995. See if we can go over here really quick. Right in here. Okay? Right where this is right here. Make this a 4. Make this a 4 right here. And I want to show you the Fed funds rate in here. And I want to show you 3 important things. Hold on there. Let me get this back this way. I want to show you the curve just like this. And I want you to see that they peaked out right here. Cut rates, right? Pause cutting rates. They actually raised them up slightly. Paused them again. Dropped them slightly. And then began doing what? Ramping rates to fight inflation. And this is what actually sent us into this downward move, right? And this is when the market went into a bubble, right? Cut rates, or raise rates, sends us into a bubble. So when people tell you like, oh, if he's going to pause cutting rates, might even increase rates, it actually sends the market mooning to the upside. At the same time, you also had unemployment, right? Spikes its head up and keeps coming down, 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 believe it or not, right? Kind of like right there, right now, aren't we? 4.5% right in here. And you've got a rising inflation rate of inflation, gets beaten down by higher rates, slightly higher rates. And then inflation starts to ramp, right? So they're fighting like uncontrollable inflation. We bounce below the 2% and then bounce higher. Now, I want to show you what the market did in that time frame right now, if we can. Let me show you between these two periods what actually happened. Now, whether this happens or not for us, whether this happens for us in this time period or not, I don't know. And I don't know how long it lasts. But there are a few key things to see in this. We entered a bubble into the year 2000. You can now even see this last little period right here is when they were raising rates to fight rampant inflation. So you'd be wanting to see, if we're kind of coming to the top, you want to see like rates being jacked up, jacked up, jacked up, jacked up. When we're dropping rates crazy fast, we start to roll the market over. But some other neat parts of the 1990s was the volatility that came into the market. Unlike this smooth ride higher, we get periods of major downside moves. This one right here was 10%, only to resolve to the upside. Another major mover, I think that was 5 or 7%, but then a blast down of 13%, only to go up another 40%. So notice the volatility that enters the market as we go up into a bubble and a top in the market. So if you're looking for the Fed to continue to cut rates slowly, let's say they cut the 25 BPS now, they cut another 25 BPS in January, February, March, whatever, into summertime, the idea would be that we're here. We're actually over here. Does that make sense? Somewhere in this zone right here. Now, the Fed is open to pausing rates and even maybe raising them. We're actually somewhere in here, more than likely. More than likely. So don't look at one day's price action in the S&P 500 as an indicator of we're at a top. If anything, if there were some reporters today trying to imply that. What about continuing to cut? Why aren't you staying on the path of cutting? They want to see us here. They want the crash to come right now. You're more than likely, though, still in this period. How long this lasts, I don't know. I don't know how long until inflation runs away from us rampantly. And if the Fed begins to tighten uncontrollably, if they start seeing like no more pausing, we start seeing we could probably withstand a 25 BPS hike. And that's, I just showed you that down there. They raised rates slightly after pausing, after cutting and then pausing. They were even able to raise, I think once or twice they raised. And we did have fallout from that, but it still resolved to the upside, big upside moves. So the one thing you should be thinking about in 2025 is more what? Volatility. We've talked about that for the pullback in spring low and the summer low, that if you were like, let's say you were like, we're going to trade to 7,000. I think Tom Lee said that, 7,000 into September, October of 2025. I would put an asterisk in there and say to you, there's a good chance, even if we did, that you would see outsized corrections in 2025 that grow as time passes. You can see one right here. You can see this one right here, right? Top to bottom. Let's take a peek at this one. Top to bottom, 10% down move. And let me show you how quick this was. This was from the 18th of February to the 14th of April. 10% move, 1 month. How did it resolve? It resolved in a 24% upside move. you would have done better to stay long in spreads, call spreads, farther dated out than you would then from getting scared on those downside moves. So if you're going to be in market in 2025, what would be the rules? Expect more larger downside moves, and you would stay better staying long the market until they aggressively begin to raise rates. So until they begin to do that, historically at least, you would look for major dips to buy with duration on those dips, right? Spreads, own the market, anything like that, and hold that until we go to a point where the Fed is slamming, and we're coming into meetings and they're going, raise 25, raise 25, raise 50, raise 25, trying to fight inflation, just ripping. But we're not there yet, are we? We're not there where we have $15 eggs. We went through that in COVID. And that's my next question here, which is this. Let's go back down here and look at one more thing. Have they actually reined in inflation? One quick second here. You look at this big inflation curve right here. And the question becomes, this is your unemployment rate, right? This is your rate of inflation. Your rate of inflation starts to run higher. They're saying, well, we're going to have more jobs. It's okay. Don't worry about it. It's going to go down. But once this inflation rate starts to peak up here, hold on a second here. You can see the volatility in unemployment, the volatility in inflation. And that was some of the questions that they gave today. Do you see this volatility here? Does this actually go down, then swing higher? Does this swing higher? Then these meet up, right? And then inflation comes down as the Fed is cutting, raising, and then boom, a top of the market in late 2025, late 2026. This is dangerous. Is it dangerous today? Probably not. Is it dangerous down the road? Probably yes. I don't know when that happens. I don't know if you see the volatility continue. If you see the volatility continue, look at this. Woo! Look at that SPX cranking, bloodbathing right now. Bloodbathing. 3% down move in SPX today. 3% selling into the bell right now. So I don't know what the answer is to 2025. I can't tell you. I can't tell you that. I would expect that if the top was in for January, you would not have heard that hawkish speech from the Fed today. I think you would have heard a very dovish Fed if the top was in on Jan 1. I don't think so. I think they're going to run it hot into probably at least summer, spring, or let's call it end of Q1 into Q2, and they'll look again at it. And so that's why I think you get that outsized downside move for that springtime low. I think your summer low is going to be the same thing, a big major correction, maybe down to the monthly trigger or something like that, and then a blast off maybe in the fall. And that's the one danger. Trading down on SPY right now to 583.55. I open call spreads right here. Oh, I got them filled for up here. Doom and gloom into this close, trading 586.80, 586.88 right now on SPY. But take a breather. I know some of you out there are like full panic mode. Take a breather on intraday minute charts and bloodbathing it down for 5 minutes. It's probably going to be a bunch of people on Twitter going, that was the top of the market. Market crash early. Market crash confirmed. There's got to be. Account blown. I know. Account blown. Wait a minute. Did you just get into the market at the absolute top of Qs? Yes, I did. Account blown. Every position you've got. Oh, my positions are all red too. I've got spreads for Jan 17. I got spreads today, so I'm all red right now too. I'm in the same boat as you. I'm in the same fucking boat. I should have waited on call spread. I was like, maybe we'll do it right to the bell, but I'm not really bearish here. If any of you guys want to know, I'm pretty fucking bullish here, not bearish at all. You guys like buying tops. I like buying doom and gloom like this, so I feel pretty good right now. Well, I'm trying to read what you guys are commenting right now. Hold on 1 second. I'm trying to read. Oh, you'll be back. You'll be back in a day or two. You'll be back in a day or two. You'll be back in 1 day or two going, oh, we're supposed to crash tomorrow, Cap. I was short into the close. I chased the close. Now we're at 610. You went back in short and then got out? You must be a bull. All I see is red. You guys are killing me. I'm deep in spreads right now. I got a lot of money on spreads right here. I'm pretty deep right now. pretty deep. I was on the phone earlier with a friend that was loading up too. The two of us were loading up at the same time. We're talking on Signal about getting long here. Yeah, well, I bought mine at 604, 605. I started getting fills, so we're at 587 right now. It's pretty bad, but I got a lot of time on that shit. I got straight calls too that I have not closed for Jan 17. Those are getting fucking destroyed right now, getting fucking hammered. Is now the time to get long? I can't tell you when to get long. I was just on the phone with Joe Donut, and he said to me, he goes, are you getting destroyed? I'm like, no, I'm in all fucking spreads base. I'm in spreads and I'm in long dated calls. So no, I feel fine. I feel good. I'm not one of those like tech buyers. I'm not buying like Tesla and SMCI and all that kind of stuff. That's not me. I tried buying zero dates twice last week, zero dates once this week, and I got fucking torn up. So I was like, fuck that, done. All I'm doing is spreads. I never trade zero dates during the holidays. I just buy spreads and wait for them to print. That's it. You're in next Friday calls. I've got calls for the 23rd. Call spreads, no, not straight calls. No straight calls for that date. I've got call spreads for the 23rd and for Jan 17. And I'm sure we'll be back here tomorrow and we'll be fucking ripping faces off. And you guys will be all mad. You'll all be short. I'm sure you're short into this bell too. I'm going to guarantee you're all short into this bell. Guarantee it. I'm trying to get long here, so not trying to get. I wasn't long on the. I wasn't long zero dates or anything on the. What do you call it there on the FOMC? You're all naked. Jesus Christ. Balls, Stonks Anonymous. I can't get long like that. Every time I listen to somebody tell me to buy zero dates in the chat, I get hammered. Fuck no. I literally cannot buy calls on stream anymore. You're naked too, Joe? God damn it. Yeah, I'm sweating too. I'm not gonna fucking lie to you. I've had a pretty good year. So this last 2 weeks has been I haven't traded a lot though, but the last 2 weeks I haven't traded a ton. So I probably wouldn't be losing right now if I was trading more, believe it or not. But I do have a week and a half of losing right now. As of today, I've got a week and a half of losing. Any executed trades that I've taken that were like zero dates, fucking blown out, which is par for the course. It's going to happen. So I'm not going to win every single goddamn trade. Ain't no fucking furu. I wish I had some fucking puts on. I'll tell you that. I do. And you know what's fucked up is, what's really fucked up is that I've had ratios on, and none of these fucking ratios I've hit on. We haven't come down low enough to hit on it. I've closed some upside on them, but none of my downside shit has hit. None of it. Don't say that. You're my quant. I can't have a bad week. Well, that was the other thing that I was saying too, Darth Molly, is I was like, I'll be back in I'll be here in Jan 17 going, woo, rich. And everybody else will be getting long. So it's always the flip side. It's always like, oh my God, I'm getting blown out and I'm making money. And I don't know. It's always the opposite. I need to be bearish a bit more. I got to be honest with you. I was pretty bearish. I was pretty bearish with a Harris win. I'm telling you right now, if Harris won, top of the market was Jan 3, and maybe the 17th or 20th. I was fairly certain the top was in if Harris won. With Trump winning, Trumpers don't want me to say this, but they're going to fucking whore this market out. And anyone that doesn't believe that is out of their fucking skull. It's all money. It's all business, deals, and money. So, in my view, at least, they're going to ramp this fucker to the moon. So, and I would take the hat off, that Main Street hat off, especially if you're a market participant. There could be they talk about the Trump correction, but I don't see that correction until 17th, somewhere in there, maybe a week earlier. If I can get the print earlier, I'm going to get out. But I see the Trump correction, but they could super ramp it into March, easy. And the only difference of my opinion than most others' opinions is the volatility. I see everyone saying it's going to go straight up, and I think you get the volatility next year. I think it's going to be. We have to go over this probably in a video because there'll be some hints if we don't catch. So we go lower than expected in the spring, and then don't catch the all-time high again and continue higher. That could be a problem. So we'll see if there's a problem in the springtime. If there's no problem in the springtime, I'm going to be. I've already been thinking about it. I've been thinking about this for about 3 months. I'm like, or not the 95 trade. We're talking about that here for a year, I think. I mean, at least springtime. I've been talking to you guys about the 1995 shit. But the one fucked up thing for next year is, or at least from my perspective, is the one fucked up thing for next year is we're probably going to shake out most retailers. I think we'll shake out almost all of them, bulls or bears. I think the bears are going to be drinking Kool-Aid on major lows. I think the bulls are going to be too afraid to go long. I think it's going to be. I think you're going to either miss the entire trade. It'll be like an argument like today. Like today, this is like a taste of it to me. Where you're going to get on a major down day, you're going to be like, oh my God, we're fucked. And not seeing this as bullish, right? Like you're not seeing this as bullish. And then you're going to be on a major high and saying, we're going really high right now. So I don't know. From my perspective, I think I would say that by whenever that roll happens, whenever that top comes in, that we would have shaken off everybody. That's what I suspect. You get a whole new class come in after the crash happens. And there is a real risk of depression, not just recession. There's a real risk of like a real bubble, and there's a real risk of depression. You can't time this shit. I got a thing for you guys. I have a whole video for you. I got to write up on it, how to prepare for it, how to trade it, how to be ready if it happens in your own life, personal life. That kind of stuff. So we'll talk about it. I just don't think it's early. I think it's late now, mostly because of Trump becoming president. Yeah, I think we're done going down. We need puts, man. We need put buying. Buy more puts. I need you to buy fucking puts. As many fucking puts as you can buy. Buy them all. Buy every single fucking put you can. I need you to do that for us to go higher. So just keep buying puts. Like, buy as many as possible. Buy puts. As many as you possibly can. We talked about that earlier today, didn't we? I swear I said that like 10 times. We need fucking fear. I need fear. Give me fear. More fear. Lay it on me. Just please. Begging you. Just keep doing the fear. We can't break through and up and away. I'm seriously. Like, just buy them all. My outlook is up. I'm bullish. I'm bullish into Christmas. I'm bullish into or 23rd. I'm bullish into the last trading day of the year. I'm bullish into the 20th. And this shit doesn't mean nothing to me, in my view at least. So for me, I'm not bared up at all. I've seen too much of this shit. I've seen too much doom, gloom. I don't know. I like that. So what I read, or so what I watched that Fed meeting today, that gave me more. That gave me more. Yeah, maybe they can extend this a little bit longer. Because I'm on the fence on it. I'm like 50-50 on this whole fucking thing. And the Fed saying that today, that they're willing to pause, makes me happy. I'll be honest. I'm a bull. I'm not the bull that likes seeing rate cuts. Oh, I know that they have to do rate cuts. If inflation keeps coming down, they got to cut rates. I get that. But outside of that, with the uncertainty with inflation next year, I just showed you 1995 to 2000. Just showed it to you with all three of those numbers. So I'm pretty bulled up right now. I'm actually, if we can get a pullback of like 15% or 30% at all this year, this upcoming year, I'm probably going to buy the market in force. So, like actually buy SPY. So, I'm looking forward to it. Just give me like a big ass fucking correction, giant fucking correction. I want to ride this fucker up if we can. If we can, I want to ride it up. And we'll know if we come back to test that prior high and we fail it, we can get out of the market. But if not, if we start making new highs and start putting like, if we put like 30, 40, 50% on the board once or twice this year, that's fucking stupid. That's literally fucking stupid. You get like a spring low and you get like 35 to 50% run out of that. And you do that shit twice. You get like a 35% run out of spring, get 50% run out of the summer. Fuck. We'll be fucking rich. We need inflation to rage too. Or you better be doing that because inflation will be raging, right? If inflation rages, your money will be worthless. So you kind of have to chase it. You don't have a choice. You're kind of like locked in. You're a hostage. And you can't put your money anywhere else. You got to put your money into the stock market to outrun that inflation as it fucking rears its ugly head. Yeah, you got the 27th. I didn't get the 27th. I just got the 23rd. I didn't get the 27th. I think we sell the 23rd hard. Definitely hard. Also, we got the VIX up today. We got the hold on a second, I'll show you guys. And look at IWM. IWM went down and blasted all the way down to its lower. It's that lower line that we had down there for trend. Went all the way down there. Just think about that right now. Let's go look at this. Think about right now where you are. Oh, I'll go look at this right now. So let's look at this. Here's IWM, okay? Remove everything. We're just going to remove everything right now. Can I delete everything? Remove everything. This is IWM. Just look at this with me. This is IWM. Who's bearish here? Is everybody bearish there? Oh, so I'm going to say in stream, yes. Was everybody bearish right here? I'm going to go in stream and say, I bet it was fucking doom and gloom. Down there, yep. They were definitely bearish there. They were bearish there. What about this one right here? That's pretty nasty, isn't it? Look at that. Who do you think's buying that right there? Who did all that buying right there? Was it you or me or nobody? I should have bought some call spreads here on IWM too. I should have. But just look at that. Look at that doom. Look at that candle right there. Just bam. Look at that blood. Ooh. More doom than you can even think. Just doom, 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 and doom. And look at this. This was 1, 2, 3 sessions later. That was a 6% up move 3 sessions later. So for me at least, no, I'm bullish here until you can't buy the dip anymore. Until you can't buy that dip anymore. Still bullish here. God, I should have bought fucking IWM. I should have bought it. I didn't buy it. All right. I'll see all of you tomorrow, 9:30 in the morning. Let the market digest the information that came out. I know you want to say that was a bearish Fed or hawkish Fed. It's a hawkish Fed, but it's good for the market. Think about that. Good for the market right now. I'll see all of you guys tomorrow, 9:30 in the morning. I think I've got everything fixed out with the stream. I think everything is good. I worked on it past 2 days. We're back to 1080p. I'll see all of you guys 9:30 in the morning. I have to go to my daughter's recital right now. I've got to recite. I got to get ready, and I got to be there for 6:30. I'll catch all of you guys tomorrow, 9:30 a.m. Don't get too crazy. I want you to think about something right now. Think about if you got blown out today, right? I want you to think about if you're bearish right now, right? You got blown out today on the top, and you're getting bearish on the bottom. I want you to think about the mindset of both of those things. I'm buying tops, and I'm super happy, and I'm not buying bottoms, and I'm super